Hey everyone, how's it going? Igor, Nandan,
Going good?
awesome. I think we're having a little bit of a connection issue. We've connected to our YouTube channel and to Instagram, but it seems like X is having an issue. But yeah, how's it going, guys? Igor, did you trade today?
Yes, I made a loss.
You made a loss. I see Nandan said he
Wonderful.
also had a bit of a tough morning session.
Yeah, I luckily didn't take anything today, but I'm interested to hear in what you saw today.
Okay.
Yes, if you want, I can share a little bit.
Yes, please
Start.
do.
Yeah, of course.
Okay, I'll do that.
Are you pulling up your charts, Igor?
Can
There
you
we
see?
go. There we go.
Excellent. So this is my British pound dollar chart, and I will just show in the moment when I was trading. It was something like this. I will just show a little bit the trend line. And you can see the trend line of 30-minute chart. This trend line is from the March 27, where we are in we can say the bearish momentum or sideways trading. And what my plan was to catch the high, and to make a sell order, because last couple of days on the larger time frames, for example, like on a 4-hour chart, we are seeing some kind of the bearish move. So just imagine this chart without last two candles. So it was really looking as a bearish move, and I wanted to enter some high level, and what I wanted is to touch this trend line. So somewhere in the middle of the euro session, the price touched this bearish trend line, and I entered trade with a stop loss of the 1.2940, because this 50 retracement level and this area was my bullish bearish invalidation point for today. And I put my target at least to the first target 1.2890, and after that maybe more. I was open for the new targets, etc. So that was my plan, but I made okay. So first to tell, there's nothing wrong here, because I had a bias, I had a bullish bearish invalidation point, I had a bearish divergence. So this is the normal setup, and if I make a loss, it's normal thing. So there's no problem with that. However, now what I'm trying to explain to myself and to the audience is why this setup is not the A setup. Why is not the great setup for me, and why I feel uncomfortable in some moments. And the main reason here is first the market structure. As if we watch right now the market structure of British pound dollar, we can see this blue line. I'm using the free Lux Algo market structure oscillator, which is very good, very similar to Larry Williams' oscillator that he used to show the market cycles. So this market cycle is bullish. So I'm against the major market cycle. So my rule is that my A setup, if it's against the major market setup, it cannot be the A setup. So this was the first thing. The second thing was, and this is mistake, which I need to accept, is the moment. I need maybe to a little bit zoom in. The moment when I enter into the trade is the moment, I think 10 minutes earlier, before this green line that I just put on the chart. The problem was, if I trade on 30-minute time frame, my rule is wait to see the 30-minute candle to close. And I didn't I did that 10 minutes before that. And what's happened, the price just closed above this trend line. It's a small push, but I know based on experience, if that happens, usually big move happens. And after that candle, we had a strong push upside. It was more than 20 pips in 1 hour. And this was the problem. The problem was I should be a little bit patient because I need to wait to see the 30 minutes candle close. So that rule I skipped, and it was the bad thing. And another thing, which is the as I see from the last time, this is the Nandan field of his experience, and it's weak, strong currencies. Based on my experience, for example, if I see some currency, for example, I would just take the Aussie dollar right now. So whole this day, from the yesterday, but whole today, we have a bullish bias here, strong bullish push. And today we had a really bullish push against the US dollar. And when I see that one currency pair against dollar is so strong, and it's not so strong against all the other currencies, so we can of course interpret. I hope that Nandan, you will show your heat maps and discuss a little bit about Aussie and dollar and British pound, and maybe we can see later about that. But just based on the look of the chart, it's not normal that you have a currency pairs without any news or any big fundamental data to go against the US dollar so quick, so strong. And what's happened, just 1 hour after that, all other currencies started to go against the US dollar very strong. And it was something that just took my guard off. And I think that the timing was the problem too, because based on my strategy, very similar to Richard, I'm looking for the opening range, and I wanted that time frame to enter into trade. And now I did that 2 hours later, which it's not normal usually to have some big push in the pre-market moment. So like I just want to describe. So when I watch the market, we should have an Asia session. Then we need to have a UK market open with usually some false breakout. Then we should have a couple hours of the real main daily trend following that trend. After that, 1-2 hours before the news, in the pre-market, before the US opening range, we should have some choppy price or something like that. And then we again should have a major trend to see. This is the normal day, the normal tempo, the rhythm of the trading day. But today we had an unexpected move in this moment. But I think that's simple. It's correlate a little bit about that news and the Trump speech that we will have on the 10 GMT. So I don't know. So there's no problem with that trade. It's a small loss. It's a loss. I had some kind of bias. I will just describe it. It's not some mistake, big mistake, but I made few small mistakes, especially this one that I didn't wait to see that 30 minutes candle close, and because of that, I think that this trade was a bad trade. So I just share that. And
but it happens, Igor, right? It happens to all of us.
Yeah.
It's going to be very difficult being 100% stone cold executing precisely what you're supposed to be doing.
Yes, in the books, on blogs, on YouTube, it looks it's easy. I just need to be disciplined. I just need to be focused. I just need to be like this. But we are human beings, and sometimes we miss a little bit some step. Sometimes I forget to watch the US dollar index, for example. I forgot to watch something sometimes, or volume, and usually that can be the one of the reasons why I took a trade that I should skip. So So this was my story, and I just want to see the Nandan's heat map right now, just to see his observation about the current market today.
Yeah,
I
of
will
course.
just
And
stop
and
my screen.
and just to add on to what you said, as traders, some of the best trades I've ever taken, I've broken a rule or two. It's all you can have a trading system that's very good that gets you 80% of the way, but the rest of the 20% is sitting in front of the charts daily and building the intuition.
Yeah.
That's a very big part of it as well. You have a
Mm.
solid trading system, you have all the rules in place, but sometimes you realize that, hey man, I could break a rule here. Or I feel like, just a feeling, a gut feeling on the inside, uh, that if I break this rule, it's okay, and you'll accept the outcome of it either way. But I think that is built over time. So I don't think it's always wrong to break a rule. Stick to it as much as you can,
Definitely
but
not.
don't be afraid.
No.
Yeah. But yeah, I'll share what I'm seeing in the markets currently right now. Let me share my screen. Okay, you guys should see a. Hold on. There you go. Okay, so what I
Oh,
got
nice.
up here is a spreadsheet, and this spreadsheet helps me analyze the larger time frames of the market. So I usually look at the W1, the D1, and the 4-hour. That gives me a brief overview of what's going on long term. And I have 28 pairs lined up here on the left. And what I do is I just go onto each individual pair, like the W1 time frame on the Euro USD. What is the trend on it currently? And I can show you that right now actually. Um, Just waiting for it to load up. Okay, so here I'm on the Euro USD. The weekly trend on this guy is pointing up. The trend indicators are pointing up. The daily time frame, the trend indicators are pointing sideways, and the 4-hour is completely sideways as well. They're pinched off. So then I just input that into the spreadsheet, and then it populates automatically this whole entire
Uh-huh.
field. And
Impressive.
yeah, and what this does, it shows me consistency in the market. And as you can see,
Mm.
look at the D1 column here. There is not one single D1 trend out there. This
Yep.
market is trash for foreign exchange trend trading. I love to trend trade. I like to trade with the higher time frame trends. That's the bread and butter here. But with that being said, since the market conditions are like this, I like to adopt a more intraday trading style when we have no trends available or things are just moving sideways and or just not moving at all. So looking at the spreadsheet, you can see an example of the euro being strong or the euro being weak, and that's the way I want one of these columns to be orientated. So I'd like to see five. So there's 7 pairs in each column or in each box, and I like to see a minimum of 5 out of these 7 pairs going in the same direction, and that gives me some sort of consistency, saying, hey, you know what, it might be worth the chance to take a look at this currency group.
Yeah.
And as of right now, there wasn't really much. I did see some short-term Aussie dollar strength and some short-term New Zealand dollar strength coming
Mm.
into the market. So we'll take a look at those two currencies, um, and I'll actually move into the charts. But overall, the market conditions show that the market is still pretty bad. I don't see many trends available, many opportunities available, and the market is, there are some ranges that are happening, but they're all under 100 pips. I like to see minimum of 100 pips of smooth, clean potential before I even want to pull the trigger on the trade. And
Yeah.
unfortunately, we don't have that. So I did have a couple pairs that I wanted to talk about as like a trading plan. Um, what I'm looking at in the current market, and I guess I'll start off with the pound US dollar. So. Um, Okay, so it's going to be the pound US dollar, New Zealand US dollar, and the dollar Swiss that I'll start off with. So let's zoom in on the pound dollar. Pound dollar is obviously in a strong uptrend on the weekly time frames. If I go to the daily time frames, we're in this big consolidation area. I am looking for a break of 1.30 for a trend continuation to the upside, or if there's some news catalyst or something like that, I'm looking for a breakout at this support area of 1.2. 1.286. If it breaks one of these points, this is what I call a straddle alert. It's a pretty big range. Don't get me
Yeah.
wrong here, but either direction it goes, I'm pretty interested in a trading opportunity. To the downside, if it breaks the support level here at 1.286, I'm looking for a move. It could potentially come a cycle all the way back down 260 pips, but you certainly do have areas of support that are in the way. At 1.27 and then at around 1.270, just around that area, 1.277 and 1.270. Around those two areas, I'd certainly be watching how the pair reacts to those areas and making my decisions based off of that. But if it was to go against the major trend, if I was to sell this pair, I have in mind that the market conditions are not trending, and this is a counter trend trade. So my expectations get lowered. I scale back on my position size, and I want strong momentum. That's pretty much it.
Okay.
That's the trading plan going for the pound dollar. Obviously, for a buy side, if I'm looking to buy this pair, I got it's currently at a very strong resistance area right now. So if it does crack this resistance area of 1.30, I think it can certainly cycle up to 1.34, which is about 85 pips, 390 pips away. And you know, you get into this trade, put your stop to break even, and let the trade ride. You're playing with the market's money at that point. But before then, I'm just waiting until one of these two areas are hit, and then
Mm.
seeing what happened or what caused it. Moving to the next pair that I have in my trading plan is the dollar Swiss. It's almost the same exact situation as the pound US dollar for me. It's in a long-term downtrend, but the D1 is consolidating sideways. There's two opportunities here. One is a trend continuation, a breakout point of the support that we have here at 0.875. If it breaks out of that support zone, we definitely have room all the way down to 0.841. I definitely think this pair can cycle down because you can see this pair has been ranging in very
Yeah.
large cycles. So if it does continue its trend to the downside, I'm definitely going to be looking to trade it. But in the off chance it doesn't continue downward and it decides to cycle back in reverse and make and pull back, um, I'd be looking for a 1 to 3 day swing, to the upside. Just we don't know where it can really stop because this is a counter trend trade, but certainly again, your expectations are lowered. Don't be expecting 300 pips on this trade, especially with the market conditions we have. We have potential of about 160 pips from the current resistance that I have set at 0.886. But this is just one of those pairs that I just think it needs some more time to develop, and we need a strong catalyst coming. And guess what? We got Friday and a Trump speech, I believe, later today. And Friday's non-farm payroll, so I'd be very interested to see how that pulls through. Now,
Yeah, it'll be interesting to see what happens during his speech as well.
yeah, of
But I
course.
mean, I'm going to only be able to catch up on that tomorrow because it's quite late my time today.
Right. The next pair I thought that looked, somewhat interesting was the New Zealand dollar. The weekly time frame had a huge move to the downside. It's completely consolidating, and it's the trend indicators are pinched off. So this pair needs to choose a direction, and I really like a potential buy plan. I did have this pair in my trading plan, I believe, a week or two ago when the dollar pairs were consistently weak, but Igor mentioned something that um, I thought was going to happen 2 weeks ago, which is a domino effect, and that's pretty much, there were other currencies that were leading the dollar weakness, and the New Zealand dollar and the Aussie dollar didn't really catch up with the other pairs. And I'd be really interested to see if the dollar weakness does come in or New Zealand strength does continue, how this pair would move. But it's too far away from its current resistance points. It's 90 pips away. So, and this pair is quoted at 0.574. So if I take the 1% rule, which is a huge move in the Forex market, 1% of this pair is 57 pips. You move the decimal point over 2 times. So we're currently 100 pips away. So that's a 2% move away from the from a point that I'm interested in trading this pair. So we're going to give this pair some time to figure out what it's going to do and just develop a little further. But let's take a look at a pair that, there was some movement last night. I'm going to bring up the heat map here, and this left side is the Asian session, right side is the main, European American session. So in the Asian session, actually, we did have some movements. We had the New Zealand Canadian dollar move, and we had consistent New Zealand dollar strength, which is consistent with what I saw on the spreadsheet. The spreadsheet, the 4-hour is starting to show strength. And where is that strength, coming from? Well, we had a strong move last night, and I'll actually show you that on the charts right now. The best pair that moved was the New Zealand CAD. It moved, made a 89% move. So let's take a look at the pair. So the weekly time frame on this New Zealand CAD is going completely sideways. The daily time frame on this pair, you can see it's pretty ugly. It's just making really unstable moves, and I wouldn't have, if I did take this trade, it would certainly not be a trend trade because there's no trend on it. So taking a look at the entry time frames, look at this 15-minute, look at the smooth move that this pair made. It's a pretty strong move. And this, when you get a signal from the heat map, when you get a reading from the heat map that says there's consistency in the markets, this is what you get. Let me pull back the heat map. You have 1, 2, 3, 4, 5, 6, 7 New Zealand dollar pairs going the same exact way. They're showing New Zealand dollar strength. And what are we pairing the New Zealand dollar against with? The Canadian dollar. Well, look at the CAD. The CAD is, 6 out of 7 going the same way in weakness. The CAD is weak 6 out of 7, and the New Zealand is strong 7 out of 7. So you pair those two together, that's a slingshot. You want to think of the market in probabilities. What is the probability that you're going to have a successful trade entry? And obviously this isn't a long-term trend, so this is more of an intraday type of trade. So this is the type of movement you get. It's a smooth movement to the upside. It just kept going up. There was no strong pullback on the 15-minute. It just kept going up. You could have got into it, set your stop 30 pips away, 25, 30 pips away, since this isn't a very volatile pair. But 25 to 30 pips stop would have been enough, and you could have made yourself a good amount of pips. I was asleep during this time, so I unfortunately missed it. But I certainly would have taken this trade if I had the opportunity. But I wouldn't have gone in full scale. I would have scaled back and probably would have scaled out about 75 to 80% of my lots if I was up like 30 pips or something like that, and let the rest ride. And one other thing I wanted to say is, if you tried to get into this now, that would be a very bad move, because one, you are already 89% or 90% of its 1% movement. Remember, 1% is 81 pips on this pair. So if you're already 89% done with the move, of 1%, I like to think, you're taking on extra risk. You always want to be at the beginning of the move. Look at this chart. Where did the move start? It started right here, and you've pretty much missed it now. So this was an interesting way to see the intraday momentum come into play. But this is exactly what I'm doing on every single trade. If I took this trade and it was trending on the higher time frames, I probably wouldn't even have scaled out any lots. I would have just left it in here and let it ride. I'm playing on the house's money at that point. I'm very comfortable with that, because we had good strength versus good weakness. I would have probably been up about 40 pips, but can't really show that right now. Other pairs I wanted to talk about: Bitcoin, potentially cryptos making a move on the 4-hour. I did see some interesting things with Bitcoin, especially the 4-hour. I'll actually go into the weekly time frame. The weekly time frame is going completely sideways now. It's made its downward move. It's consolidating in a range on the weekly. The daily has been making random moves, but now it's sort of making like a U-shaped reversal here. and we can see that clearly on the 4-hour time frame. You know, it looks a little smoother. The cycle looks a little smoother. So I'd be really interested in a buy opportunity at 85. Let me see this, 85,583, and potentially up to its next resistance target, which would be 87,547. I'd definitely be interested. Now, if I was to enter this trade, I would look at my heat map again, and let me go into the crypto heat map. So currently, we see the markets. Um, well, in the Asian session, the market was pretty red. When I'm trading cryptos, it's a bit different from trading the foreign exchange. When I'm trading cryptos, I want every single pair in that session to be green. I want everything to be green. Bitcoin is the main 100-pound gorilla in here, so it's I just want everything to be going the same direction. Ethereum, XRP, Bitcoin. These are the big three. Main cryptos out there. Certainly other ones too, but I found that when we have consistency in the entire crypto market, the entire crypto market going the same direction, then you can certainly have profitable moves and more stable moves with crypto, because we all know how fast it can move. So it's definitely a level I'm watching, and at the time of the price, if the price breaks out and pings at 85.62 price alert, I'm certainly looking for a buy to the upside of 87.438, and I want confirmation from that heat map. The entire market's got to be green. Ethereum, there's not too much going here. XRP almost looks a little bit similar to what we have in Bitcoin. Bitcoin, this could potentially be the first domino to move up in the crypto market. I don't really know, because the entire Forex market is choppy. The markets aren't really that stable. But you can see these chart formations. This one looks like it's already it's ahead of XRP. Bitcoin looks like it's ahead of XRP in terms of the movement cycle it's made. So 4-hour on XRP is currently consolidating, and I'm just waiting for it to pick a direction. Is it going to continue going downward, or is it going to reverse off of this consolidation area and potentially come back up to 2.4388 off of its current resistance price alert of 2.225? So that's a price alert that I'd definitely be wary of for XRP. But the last pair what I really wanted to talk about was gold. XAU against the US dollar. So gold, man, we're in a humongous uptrend. This is a
Yeah.
really powerful uptrend in place. The daily, we broke out of this consolidation area of sideways movement a couple days ago, last week, and guess what? We're consolidating again on the 4-hour. So my trading plan for this pair is to wait until it tests the current resistance area at 31.49 or 31.50. I would say it's a nice even number, and getting confirmation from the heat map. That's pretty much it, and just ride this trade out. This one thing I would be cautious about with gold, if you're going to buy it now, is it's not a fresh move. This is not this is a trend continuation, and you also have no historical resistance. So with that in mind, you can certainly get into a position with a full scale entry. I'm not saying don't get in with a full scale entry. I'm saying be willing to take some profit a little bit sooner. You don't want to get into a long-term uptrend that's just been going up, 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 and up, and then you get cycled out because of a major pullback, or something happens. Counter trend movement happens. You don't want to be pulled out, and you want to be as far away from the market as possible if you want to ride out trends. The closer you are to the market, the higher the chances that you can get cycled out on a potential. You can get stopped out. So
For sure.
that's pretty much my plan for gold. Wait till it hits its resistance area. Look at my heat map for a buy, for a good reading, and then get into positive pips immediately. Scale out my lots and just leave the rest to ride. That's it. But
Awesome.
yeah, that's all I saw in the market for now. everything else is pretty much just going sideways and not really doing much.
Yeah, we got quite a lot of action here on the indices currently, but try to get into a trade, just lift off one directional again. So if you don't mind, I'll quickly show my charts.
Right.
Let me just do that quick. Can you guys see that?
Not yet.
There we go. That should work now.
There you go.
Perfect.
Yep.
Wow.
Yeah, so we had the situation where the NASDAQ took out this high low of yesterday around about 19,217. And we had beautiful structure moving into there. You can see price broke. This is on a 5-minute now. Right into my time zone, right after the opening bell. And if I switch to a 1-minute time frame, you can see that structure that was broken to the upside as price was making lower lows, lower highs, and boom, breaks it over there. And it left a really nice big fair value gap for us. You can see I've got a buy limit order with a stop loss very close to the lows here. And at that stage, it was in the middle of this fair value gap. I mean, I can decide to put it on the top or a little bit in the bottom, but in the middle of that fair value gap. But here we have that situation again, V-shaped bottom. Price moves into a low and it's liftoff time. We didn't get any retracements back into there. I'm actually thinking about canceling this order. I think if price now does remove or move all the way back to that fair value gap after a strong move like that, then potentially this was just corrective in nature, if it makes sense. But I'll leave it there for a little while longer. Just as a quick recap, guys, yesterday when I took that trade here on crude oil, again, this sort of pink zone there, I should probably change that color. I don't really like pink too much. But we had a beautiful pullback into that fair value gap, just touched it. And remember, just as we were closing the room down, price was around about here somewhere. And eventually, a couple of hours later, price eventually hit that target. So also really a nice trade yesterday. Again, this happened after a liquidity sweep, price taking out an overnight session high, reversal, switch to 1-minute time frame, break a price structure, fair value gap formed, and then placed a sell limit order and got short. So frustrating. Same that happened last week a few times. Get this beautiful setup, things go exactly as you planned. Well, not exactly as you planned because you wouldn't know it happened. It was going to happen. But, everything sets up according to what you want to see in the setup. But boom, straight rocket back up to the upside. No substantial pullbacks as yet to, get me into a trade. And I'm definitely not going to be chasing that. So, bit frustrating. We've had a situation on both the ES and the NASDAQ. We price sort of just at the open of today or during today's session just sold off, broke a previous low or a higher low in this case, key level in my mind, and reversed to the upside. So setups there, but failed to get into an execution because price just didn't allow me to do that, unfortunately. So that's all I got to show. If something does set up, I'll be happy to talk about that. Let's just quickly talk about crude oil before I hand it over potentially back to Igor. On crude oil, after that entry yesterday, price actually reached this 70.36 level. And that was actually a little bit of a breakout level where we had previous price structure back here on when was this? Quite a long time ago, 2nd of the 3rd. So more than a month ago. Or just a month ago, right? Isn't it exactly a month ago? Yeah. So that's been retested. Unfortunately, price did not make this low in my time window that I want to trade in. So if we maybe get another run of this low at 70.36, followed by a reversal of all those things that I look out for in the 1-minute time frame, then that could also potentially be a trade. So yeah, that's what I'm looking at today. Again, frustrating, one directional moves just appearing out of the middle of nowhere. You kind of do expect them to occur, but sometimes they just move too fast. It's sort of been the story of the day these days, with the volatility in the markets. We just get these very instant and fast directional changes, and price just doesn't, give you a little bit of those pullbacks that are required to get into a trade. So that's me. I'll keep an eye out on crude oil there. Probably going to cancel this. I think that's probably the better idea. Price has already made its move. And let's see what happens. Maybe if price takes out this high, or the overnight session high, and reverses lower, that could potentially give me a sell type of setup or short setup. So let's see. Igor, do you have anything to show on your side?
Yes. So, well, just one question before this: how many times this situation that you have these crazy spikes for the indices in the first 2 hours? How this often is when you trade your strategy? Just to know.
Well, the reversals occur very, very often, but you sort of want these reversals to occur like previous day, like where you actually have a little bit of a slow type of reversal. These spikes mostly now occurring with obviously the current, fear or uncertainty, volatility, anxiety, or whatever you want to call it, that's prevalent in the markets, which is exactly probably why we get spikes, But if it moves too fast, not changing it. But I've been seeing it recently, Igor, to answer that question, even last week, a lot of times price move either up or down into that time zone, and you get immediate reversals. But rather than chasing it, you must identify where you want to trade from. Be patient. Have a plan to get in that trade location. And if price just shoots in one direction and doesn't give you that pullback, then so be it. But it has been happening quite often as of late.
Yes.
So yeah, unfortunately so, but it's what it is, and I have to deal with it. Right, Igor, do you want to show your charts? You got something to show us?
Of course, always. I will show just a moment. So I will just pick my. Okay. I'm losing my window. Okay, I hope you will see it soon.
There we go. Is that the one you want to show? Yeah.
Yes, I want to talk about two trades and about some perspective that I have a little bit about market right now. First, about like I said before, Aussie dollar, Kiwi dollar, US dollar, CAD. I always trade as a swing trade because they're always a slow burning currency pairs, and this is something that stays. One thing that I want to just share here. One of the best setups for buy trading is really Aussie dollar and Kiwi dollar. And this, as you know, 3 weeks ago I had Aussie dollar trade. I didn't should to close that trade because my entry point was 0.6212. My stop loss was 0.608. We were just I think 5-6 pips to my entry point, and I closed my trade. So I should maybe put it open right now when we are again at the 0.63. I realized that my strategy for this kind of swing trades should be that avoid break-even strategy, because it's a swing trade. You need to put it into work. You need to take a loss. I again went against my rules there, and this is something that I'm disappointed in myself. However, if we watch right now relative strength index indicator, when we draw this trend line, we can see that we are very, very close to the bullish trend line on relative strength index indicator, which means that this point here for swing traders can be really interesting. So if I enter into trade right now, for example, at this area 0.63, my stop loss should be here at 1.6180, and I would try to get some really, really high targets, as I mentioned before, 0.69. And the same thing is for New Zealand dollar right now here, because we are near to the trend line here on the relative strength index indicator, even on the chart. We had two bullish days, today and yesterday, and we just broke moving average. This is the moving average 50, and we are going to the 200. When we break this 200, I think that we can again reach September high, which can be very interesting for both these commodity currencies. But one of the tricks that we can use when we trade these kind of trades, and that I just want to discuss a little bit, are cut reports. Even that this is not futures. We know that the cut reports are very, very good because we can see what the big dogs are doing. And for example, if just to check, this is my market structure. I had one. I will just find it where I put it. Just a moment. I messing my somewhere here I had, but yes, this is the British pound dollar. I will just put on daily chart, daily perspective. Okay, if you look at the cut report, okay, first I will just give a few words about cut report, just for audience that watch this session right now. So the purpose of the cut report is to show the positioning of the institutional retail traders in the market. So potential trends and reverses are based on extreme positioning. And we have their market sentiment in various asset classes. So Relay's schedule is that we got that cut reports every Friday by CFTC and covers positions every I think second Tuesday. Whenever that, what is the most important thing? How we should read that? There is a lot of articles and YouTube videos. How should we read cut report? And there's no consensus there. What we can see and what we know, that there is a net positioning. That's the difference between long and short contracts. And we know that there is extreme positionings, high, long, or short positions that can indicate potential market reversals. So what I'm looking for, extreme positioning. And this is the maybe for me the best way how we can read the cut report, because we have a extreme positioning and we reverse and big dogs start to selling, we should sell. If the big dogs start to buying, we should buy. But the first problem with the cut report, it's very slow. So sometimes you see that on the chart, but that can happen next month or 3 weeks or 2 weeks. But if I go and watch, for example, this is the British pound dollar chart. And you can see, look this extreme here. This is the October 2024. Look this moment. We were on the high. And then the big dogs. So if you watch this blue and red line here, you have commercials and you have the speculators. You can see that the big dogs start to selling and the whole market went really, really down. But what you can see here is extremum. So there is a huge extremum between the big dogs and smaller ones. So there was a big extreme position. Right now, if you go here and watch the British pound dollar, you cannot see this. If you go here and watch this, this is not extreme position at all. So right now we can have maybe, a couple weeks, maybe 2 months, more bullish gain, and that in one moment we can start to go down. Or they can switch, but this is not extreme. But if I go to the Aussie dollar and Kiwi dollar, I will just open a daily chart here. You can see something very interesting. Here we have a little bit wider this extremum right now, and the same thing we had in April 2024. As you can see, it was extreme here, It was the middle of the April, and then we start to go bullish in Aussie dollar. So I think that the position of the COT report and the readiness to this extreme, it's better for risk reward ratio. So I don't, in this case, I don't talk about momentum. I don't talk about is better to trade long-term British pound dollar, euro dollar, etc. on this point of view. I just think that entering into Aussie dollar buy trade, I can get better risk reward ratio. Only that. With this COT report, usually I use the same thing. Look, this extreme for New Zealand dollar. So what I can see here, that the position of the risk reward ratio is crucial, and sometimes I use just Kiwi dollar to see is it smart to go maybe into some position to have a good risk reward ratio. Only that. And I see that we can have good risk reward ratio because look this point, like I put in my chart. Look this and where we are now. So this is the something that maybe if the market start to go in our direction, maybe we can get interesting path here. So of course I'll continue to watch Kiwi dollar, Aussie dollar, and all these currency pairs. But if you go, for example, on this chart right now that you watch, you can see the market sentiment and the COT report from the June 2022. And look this was extreme in 2022, extreme in 2023, this was in 2024, and this is now 2025. Look how this extreme is big. So this big extreme just give me opportunity for whatever we trade, we can get a good risk reward ratio. And because of that, I think maybe on this chart when you watch, you don't know what will happen or etc. But I think that risk reward ratio can be great here. If we, for example, see the market in the bullish bias, I think it can be very, very interesting. So
Igor, just a question from my side. That indicator that you're using down there, is it pulling data from the futures currencies or?
Yes. I think
so it looks at individually, for example, the pound.
No.
Like
I think
Ignite and Nandan would say, like extreme left and then extreme right. You must look at them separately.
I think I'm not 100% sure, but I think that a company called fxsse.com, they take the data for the futures market and they put it into the indicator, and then
that's what I think as well.
And you can put that indicator, and this is the okay because you have that COT reports one per week. And that way, this kind of news or this kind of indicators you can put on the chart very easily. And I hope that in the future, some companies will realize how MetaTrader platform is very good, or these platforms that we use, and that should be more indicators related to fundamentals that you can put on the chart, and you can watch what's happened with interest rates, or you can put inflation, you can put COT report, you can put somewhere you have, one time per month some news. It's not difficult because one time per month enter into the indicator. It's not manually, it's not some big job. And I hope that someone will do that. Maybe one day I will do that if no one's do that. And I believe it's very good because sometimes you can see, okay, this is fundamentals and this is the big shift. Maybe this fundamental, there is some correlation and you can find something interesting. Based on my research, COT report is not a holy grail. It's not something that's very accurate.
No, for sure not.
But it's very good from my point of view to catch the good risk reward ratio. And to say yourself, okay, if I enter here, I can get a good risk reward ratio. There is a logic there. And maybe if my trade is not good, I can create 2 losing trades, 1 winning trade, and I will be profitable just because of very, very good risk reward ratio. So this is something that I just noticed when I analyzed COT report that Aussie dollar and Kiwi dollar are much more interesting on risk reward ratio based on the euro dollar and British pound dollar. So So I'm just watching that, and I think that we can get something interesting. And from technical standpoint of view, when we watch, for example, right now this chart, as you can see, the trend lines are bullish. The market structure looks like bullish, but I need to wait today's speech because this candle, the last candle here, this candle is not closed. So we need to wait today, Trump revelation day, and to see what will happen to this in the market and everything. And maybe if this stay above the simple moving average 50 on the daily chart, maybe this can be interesting for traders. So I will monitor, and maybe I will enter into trade soon. So
Awesome.
we will see. We will see.
So, Igor, if I could ask you a quick question, how do
Yeah,
you
please.
know where to put your stop loss? Like when you get into a trade, what's your what do you look for to enter your initial stop?
Okay, if I use these swing trades, I'm usually watch the previous swing point. Like I said, for example, for New Zealand dollar, for this chart, for example, I could put this stop loss at 1.5580, for example, just a little bit below, and target this my huge target 0.637. So there's no problem when I have a swing trades. I know exactly that I have a wider space for my stop loss, and usually I cannot make so big mistake. However, when I trade on 30-minute chart, this is something that I really need to evaluate a lot. For example, like I said today, I always starting from the stop loss. Actually, my trade is starting from the stop loss. I find a bullish bearish validation point for every single day, and that point I calculate very one way that it's should be very accurate. What I'm looking for, I will just open is this okay. I will just put one indicator, my indicator that I create for myself. I will just put it on the chart because we don't have on the chart right now. I have so many indicators. Sometimes I'm a little bit confused here. Where? Yes, here. I can put it. Okay, I can put it this one. This just a little more to show. Okay, this is one of the indicators that I use. What we have is this blue rectangle that I use very often. This is the pivot point area. Usually my stop loss will be below this pivot point area, usually, because that bullish bearish validation point should be there, and it should be some level that is a strong level based on the asset that I'm trading. So this is one of the rule. I will just put it on the British pound dollar to show you the same thing here. I have a lot of variations here. Okay, this is the British pound dollar. So for example, if I enter long today British pound dollar, my stop loss should be somewhere at one point, maybe. Okay, I will take here this low at 1.29 because it's a almost psychological level. So I put my stop maybe a couple of pips below. For example, if I want, of course, this is very, because I don't have a trade and I have a setup. But usually, what they want to see is to have my stop loss to be in the area when I'm sure that below that area I cannot buy anymore or I cannot sell anymore. And usually it's some important price level. I have my cheat sheet on Excel when I'm calculating and finding that price levels that repeat itself all the time. 1.2850, 1.27, 1.2730, 60, and all of that points I'm just know all of them because they repeat so often, and I play around that levels and put my stop loss and targets on that levels, and I don't have doubt relating to that. However, some trades using the volume orders. There was the one session, for example, the Sam was on the session here, and I created my setup, put my stop loss target, my entry point, talk all about that, and he just go away and put order flow and volume profile on the chart and made his own analysis, and every single price level was the same. So he talked same levels as I, using completely different tool. Actually,
Yeah.
which is, everything is correlated. Usually, everything is correlated, so we can use low volume areas for some important price levels. We can use previous support, previous resistance. So it's really clear. One of the very often things that I like to use, for example, is a simple moving average 50, which can be very good support and resistance. However, in that case, I like to see, for example, simple moving average 50 to be below this blue box, and I will know then that support is very, very strong, and vice versa. Sometimes when market just allow that, and sometimes I use that in my trading because based on my statistics, it was my best setups. When you just touch simple moving average 50 and then you go down or up, it's a remarkable trade to the pip, and I like that trades sometimes. But of course, right now the market is really in messy way. I don't know what to say.
Yeah.
To draw the trend lines here, it will be some triangle. It will be something that I cannot explain anymore. And look, this something sideways, and in the last previous week Monday range, in the previous week range, and in the last Monday's range. Can you believe that? So 3 ranges, and we are still in that all 3 ranges. So this is really really crazy. So I don't know what to say. Yes.
Yeah, it's pretty
Nice.
crazy. There you go, Nandan.
No, that's pretty much all I wanted to say. I really have nothing more to add.
All right.
Okay. And just to explain, just on I'll use a lot of indicators, a lot of things that I like to use here. You can see a lot of numbers here: 4-hour distance high, for 8 hours distance high, etc., etc. So I'm creating a lot of algorithms for trading, and I realize that there are so many indicators. It's very hard to measure everything and do everything. And so I found one way that I can really explain any pattern in trading using very simple hack. What I'm doing, I can pick any price level moment on the chart. For example, I can pick this here moment, okay, and for example, it's my entry point in my algorithm. And what I can do here, I can ask myself, what is the closest 4 hours low and 4 hours high? What is the closest 8 hours low, 8 hours high? What is the 24 hours low high? What is the daily low high, etc., etc. I can create so many low highs in the past and calculate the distance of this price level to that price level. Now, because there is a problem with volatility, I create that distance in the function of the daily average range. So, for example, daily average range is the average 100 pips. I can say, if I see the move of 50 pips, I can say it's a half daily average range. And this is the number here that you see, 4 hours distance low is 0.46. That means 1/2 daily average to range is my distance, 4 hours distance low, etc., etc. And when I put that in algorithms and I make any calculations, analysis, that should be in the function of the volatility and with the real data there. And then I can do machine learning and find some setups and find some things. It's very hard, but sometimes I can find some very rare things that happen in the market, and that will repeat itself sometimes. And, for example, if I create a system of 1 minute chart, I can find a trade that will repeat one time in 3 weeks. It's very rare, but the winning rate will be very high.
Okay.
I cannot earn a lot of money there because it's very rare. So I need to find new systems and make combination of that system. So I need to trade 10, 15, 20 systems if I want to make something. And on the end,
Gotcha.
I will have a problem. I will have non-profitable days and everything, and I can control that system. And on the end, I can be profitable. It's good sometimes, but the prop companies, a lot of them don't allow that. And the other thing is I realize that I'm better manual trader.
So those systems you're talking about, automation or auto systems, trades on its own.
Yes, I have a lot of algorithms that automate systems. But the problem is that people think that you can create, holy grail robot or something like that, that will give you money and so on. It's not like that, because believe me, I worked this maybe 18 years from the beginning. The first day I first started to programming, then I start to trade. So it's very, very hard. It's so hard that, especially Forex market. In stock market, I can do something. Here is so hard. I can do here too, but it's very, very hard.
Do you trade stocks as well, Igor?
Yes, I trade, but the problem is the time zone and all my obligations and everything. I like to use the Euro session, a little bit US session, but the problem of the stocks are this. But I know that these algorithms, I have edge when I trade a mean reversion and gaps. So there I can find, for example, strategies that can be profitable. And
do you have to often refine your algorithms, or is it just something you created once and then that's it?
Yes, sometimes I need, but usually what I'm doing is I need to put in algorithm times when algorithm should not trade. And I need sometimes to avoid some situations if I know that something happens. So some small things I can put there. But these gaps, I really can tell this. All these hedge funds or all this high frequency trading, we had a question a few days ago about that. I know all of that companies, and I can surely tell you, all 90% of their strategies are related to these gaps. And they know usually that there is a statistical evidence that we have a large gap that we can be lower, for example, in the end of the day, not always, maybe 52, 53%, 51% of the time. And then they push that algorithm on hundreds and thousands of stocks and make money. So they can do that because they're very powerful, a lot of money, and a lot of good platforms and everything. But for us retail traders, I think that this approach that we have, watch a lot of assets, make a decision based on a lot of triggers, I think that this strategy is much better than this automatic tools and everything, because it's people think I play the button and I just relax, it's going. But believe me, sometimes there can be a lot of mistakes. There can be some kind of the problem. Sometimes that some gap can be because of the dividends or because of some news. And in that case, that algorithm should not work like that, and etc. But I admit that mean reversion strategies are very good strategies mathematically, because after a huge push up, we can always see a huge down moves. So I will just show right now on the chart, when now we have time. So I can show you just a few things, just to think about that. So look, for now, I just watch this price here. This is the 84 overbought relative strength index right now here. And if you see after that moment, I don't say that the price will go down after that. No, but we'll try to go to some kind of the mean reversion of the some price, a little bit down, maybe some kind of corrections. And if you calculate, for example, here is very risky. This is not 48 degrees. This is the almost you go upswing. This is a really high push. This is dangerous. Mean reversion, if you see the relative sentence is going down, 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 but this is going up, 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 just because of this. But sometimes, if you find like this is the before the stage before this, and you see, for example, this push high here, then you will see how prices go down, even the below the mean reversion, and you can realize that if you know to evaluate the current state of the market and tell your algorithm, please, if you see these crazy spikes, do not trade. But if you see this, please trade them. And if you know to explain that to the algorithm, you can create a profitable algorithm. So this is the something that I'm working and I'm fighting. And a few days ago, I realized some very interesting stocks related algorithm, and I will test in next few weeks, and I hope that I will find something interesting. For now, it's very good because optimize something interesting. So we can talk. Of course, this is the trading. I will see that maybe this kind of algorithm I can apply in the Forex market too, but we will see. I'm trying to learn what data told to me. So I will do that. We lost Nandan. I hope he will be soon here. Of course.
Sorry. Yeah, sorry. I got the sun just coming into my camera here. I'll be right back.
Okay.
No worries.
I will just stop my screen for you, that you can put your new chart there. Because now nothing happens in the market. I'm watching everything right now, and this is really, I think that the traders losing their trades around the globe right now.
It's the story of my life these days. That being said, I mean, everything according to my strategy has been working really well from an expectation point of view, but things moving so fast is very difficult getting into trade. So yeah, I mean, we got here on the SPX 500 with ES. Again, that strong move up. Same thing on the NASDAQ. Just boom, straight to the upside, almost like a chart you just showed us a while back. On crude oil, you can actually see price entering into this little zone here. Is actually where a cluster of lower highs formed during today's overnight session, around 71.04. There was a little lower high here at 71.09, so a very small zone there. Price just moved into that. We're already seeing a little bit of a pullback, but I would be interested in taking a short if we can see a break of that. So need to get above that zone, fall back into this move to the upside again, see if we can get a price structure break and all those goodies, and then hopefully get into a trade. Hopefully, I say. Because maybe it's just going to collapse again.
Yeah.
Difficult. So, guys, I don't really have anything to show. Again, just moving too fast.
One question for you, Richard. When you watch these indices, and so we can assume right now, Trump will talk about Liberation Day and talk about how these tariffs are excellent things, and stocks starting to go up because of that market sentiment that America will win or something like that. How do you see that? I know that you are a short-term trader, but just your expectation on the long term and this push? Is this some push higher for or indices, or how do you see on long term?
I think I've shared something. I'll just quickly go find it here, my email on the side.
Excellent, excellent. Just to feel the market because this push is
And
great.
it's you've probably seen me actually share this before. If I can find it, guys, just give me 1 second.
Okay.
Yeah, somewhere here I have it. Yeah. So let's share that. Share this tab. Can you guys see that?
Yeah.
So this is analysis that a guy, Magellan is his surname. He applies a certain sort of twist on Elliott wave analysis. Now, I used to be into Elliott wave analysis for a very long time. Not too interested in actually trying to correctly count, let's say, trending markets, because it can be extremely difficult. I was mostly focused on the type of corrections that Elliott wave, the theory type, kind of identifies, and then look at those sort of behaviors. They generally have repeating characteristics during those corrections, and then apply market geometry and those sort of things to try to find the end of corrections and then trade again with the trend. That being said, just a quick background from my experience with Elliott wave analysis. But this guy applies what he calls near wave analysis. Now, I've actually, this is a free newsletter that I get from time to time. He normally has a promotion afterwards, so I'm not promoting anything here, just to be clear about that. But he has, and I didn't even know there is such a thing. They have a yearly forecaster award where people actually try to, forecast what could potentially be happening, mostly on the indices, for the year ahead, and sometimes multiple years ahead. Now, he's won that award for as long as I think he's been around. So he's very accurate in what he does, give a bigger picture sort of view. This was actually given out, when was this? Let me just get that date for you. I think this was in beginning of February. So he was tracking this move to the upside, seeing it as a potential type of like an ending diagonal wedge shape sort of bearish development, right? And since I've been following, it's actually been since 2018, I would say all of his type of expectations, you see on the right hand side here, he's got these dotted lines in light blue. That would be sort of expectation. Now, whether it's a corrective pattern or one straight move down or whatever, very, very often he's been, I would say almost 100% of the time, he's eventually correct about things. So the title of this actual email was that expect very high volatility. And you can see in that sort of like octagon red box there where he's got D3 in the top there, on the right top hand side, that's where the market was when the newsletter came out, and ever since you can see that the market's been coming down pretty strongly, right? So according to him, the October 2023 low should stay intact, but whatever's happening now is potentially just a very volatile corrective style pattern. How long that's going to take to work out, obviously I can't tell you. Probably he's not going to be able to tell you that either. But, it's pretty interesting to see how some of these guys can do this. And, when you get that expectation and the market then reacts according to that expectation, it sort of then proves he was correct, right? If it didn't do that, it just kept going straight up, then obviously he would be wrong about things. So I was very iffy on the cautionary side at the beginning of this year, especially when this came out. Even in my own analysis, I was sort of thinking, are we due for a proper deep decline? And it's all happened. Now, I still think we're going to see more downside potential. And and he's looking here at the S&P 500. But then we could at any stage get one heck of a bounce back up again, but I don't think it will go to new highs very, very soon. It might be a very whipsawy type of corrective, volatile pattern that could take, I don't know, months to come before it comes to an end. You know, it's very fitting as to what he expected as well. And we know the current climate that is around with everything that's happening in the US with Trump tariffs, you know, all that sort of stuff. A lot of uncertainty, and it's fitting that the actual forecast now, you know, sort of fits within that climate and what we're currently seeing. So that's my expectation. A very long explanation, Igor. But yeah, once we start seeing that very strong decline a couple of months back, that's sort of told me, yeah, we're in for a wild ride and things are not going to be easy. That's for sure.
Yes.
Right. How are we doing on time there? We've still got 15 minutes, guys. Do you want to share something on your side there?
Yes. I can definitely go into something.
Please.
So I got, actually, let me share my screen really quickly. So it's actually the crypto Bitcoin I was talking about earlier. Give me 1 second. There you go. Okay, if I can bring my charts up. All right. So
There we go.
this is Bitcoin US dollar. I was talking about this little range earlier. That price alert did end up hitting, and I just kind of moved the price alert a little higher than what I initially had it set at, which was at it was like around 85,627. So we're kind of past that price alert now. I would be looking for a buy entry at this point. You know, we're at the very beginning of the intraday momentum of this 15-minute fresh cross to the upside. But if I was to look at my heat map, you know, let me pull that up. Oops. If I'm looking at my heat map, I want the whole entire market to be green, and it's, you know, Ethereum is not on my side right now. So this is a trade where, you know, the opportunity did present itself, but I didn't have all my criteria met. And this is, you know, Ethereum might start to go green now because it, you know, the entire market is starting to go green. But depending on what, you know, how much this pair moves before I get consistency in the entire market, I might not take this trade. I'm certainly not going to take this trade right now just because I currently don't have consistency with everything. But I just thought it was interesting to let you guys know, you know, this is how I'm trading in real time as foreign exchange, gold or crypto. It doesn't matter. It's the same approach. You know, price alert hits and look at my heat map for confirmation, and then I go from there. But this time, price alert did hit. I just didn't have confirmation, so I'm sitting on my hands and just sitting out. And you know, we'll see how this ends up progressing. But for now, no trades for me.
One question, Nandan. When you use this crypto strategy, for example, you weigh that whole market is actually bullish, which is very smart, I think, because Bitcoin as a dad push all his kids to go up. Do you have some special strategy to know which little small crypto you will trade from that universe of all cryptos, or you trade only Bitcoin?
Bitcoin, Ethereum, and XRP. So anything that's on this heat map right here, all of this stuff is what I'm looking at to trade. Usually, any crypto exchange or any trading platform, proprietary platform, whatever it might be, they usually offer only, you know, Ethereum against the US dollar, Bitcoin against the US dollar, maybe XRP if you're lucky, but usually it's just Bitcoin that I've seen on a lot of platforms. But I'm certainly only looking at these three groups of you know, Bitcoin, Ethereum, and XRP to make my trading decision. If I'm only trading Bitcoin USD and I only have that available, it's the same trading plan, you know, same process, standard operating procedures of waiting till a significant price break and then having your price targets. But I want the entire market to still be going my way, which currently I don't have.
Yes, and in your perception, can you late, for example, to enter into trade? Because if all these free cryptos start to move upper, and maybe you will lose a good position to enter into trade, or that it's not important in this case. How do you see that about price level?
Just
To
so
wait.
I'm
Yes.
clear, you're asking if other coins have made their move, uh, a significant move, how does that impact my decision on a trade like a Bitcoin or on the Bitcoin
Well,
trade or?
just watch the price level, because if I wait that all three currencies start to go up in one moment, you will have, Ethereum, Bitcoin be some kind of resistance. Do you plan to enter buy trade on resistance, or you wait for some pullback?
Um, I always like to trade on after a break of a consolidation. That's the best entry that I can ever have, because when I have a
Yes.
break of consolidation on the 15-minute, it indicates that there was a clear struggle, there was a clear tug of war, and the pair has now chosen a direction. And if I have backing with that, that makes it better for me. I can put my stop loss. That actually makes my stop a lot smaller. I don't need to risk more, and I can actually risk. I can be more aggressive with the trade entry. With a bigger lot size and with a smaller
Yes.
stop loss, just because of that. If the range or the consolidation zone is 30 to 40 pips, I have a 40 pip stop. Now if it becomes smaller to like 20 pips, well, my stop is going to be placed. I'd still place it 40 pips away, but I'd have a mental stop loss behind the consolidation zone, or beneath or above the consolidation zone, depending if I'm buying or selling. Uh, so that's kind of like the way I look at it. But if a pair has been moving up, let's say, I'm on the 15-minute chart, and right now we're at the beginning of the move. But let's say I go back to that New Zealand CAD example that I showed earlier. This chart right here. So if I'm at the beginning of the move, I'm okay with entering into a full scale position, just because this is a fresh movement. It's not overextended. So obviously I'd like to have a sideways movement and then a break of the sideways movement, and then I'd buy at the resistance or a support, depending on if I'm buying or selling. In this case, I'd be buying it at a resistance breakout, which would be right here. So if I got the heat map gives readings that it tells you what has happened in the market. So
Yes.
by the time you get consistency on the heat map, you're probably already past this first move. You're most likely going to be at like the second move, the consolidation for the second move. And what I've seen before is, since I am trading with momentum and it's going up already, I'm okay with scaling into a position as well. It just depends on how far it's really moved. If it's not too far, if it hasn't moved too much, and it hasn't been off of I'm not entering off of a consolidation or a pullback, I can certainly scale into a position. I'm not afraid of doing that. But uh, when I do enter in a trade and I have my initial stop set, I want to be in profit immediately. If I trade off a consolidation or not, I want to be up immediately. Even if in the first 10 seconds I'm down like 10 or 15 pips, I'm out. If I see some type of retracement, I'm out. So
And Nandan, are those EMAs on your chart there?
yeah, these are exponential moving averages. So the
All right.
green line is a 5 exponential moving average, and the red line is a 12 exponential
All right.
moving
You
average.
obviously also just enter long if the one's above the other, right? Green above red.
Sorry, say again.
And you'll obviously just trade in the direction of what your EMAs are telling you. So if it crosses over
Yeah,
green
yeah,
above red, only take longs.
right. That's how. Yeah, I would look at it with the intraday momentum.
Yeah. Okay.
Yeah, and then larger time frames play into effect after that. I got into a profitable trade, for example, and then now it's time to look at the larger time frames to see
Yeah.
if I want to hold it or do I want to treat it as more of a day trade.
Gotcha.
Yeah.
Nice.
But yeah, I mean, for now, there's not really much to doing this market, you see just a lot of no trends happening.
Yeah.
Hopefully, when we get some trends starting and I can get into some trades to show everybody. I do have some trades saved in my history, so I'll try to go back today and um, I've used this software called I've used a journaling software and I'll hopefully be able to show you guys exactly where I entered. I do have screenshots of certain trades, so I'll be very excited
Cool.
to show you guys on that on the next
Nice.
next session. But that's pretty much
Yeah,
the
guys, I
overview now.
think maybe this week will still be a little bit crazier. I think I got that feeling. Maybe crazy. I'm seeing craziness on the indices, but for you guys, mostly frustrating sideways, right?
Yeah, it's vacation
Hopefully, this
time.
all gets sorted out after Friday's NFP numbers as well. So, yeah.
Yeah.
Yes,
Yeah.
like
One
that.
thing I will say, when I see the market like this, a lot of people, and this was definitely a mindset I had in the beginning, I would definitely get frustrated, angry because there's no opportunity here. But this is probably one of the most exciting times in the Forex market when everything is just going sideways and it's
Yeah,
dead.
yeah,
Because
yeah.
that's when you
Because
get
you got to be on your toes whenever it does
right,
wait, right?
right.
So, mm,
The bigger the consolidation, the longer period, the longer the market goes sideways, the bigger the pop.
yeah.
So you just got to be on your toes and drill down your charts harder, know what's going on
Almost like
harder.
energy being coiled up, coiled up, coiled up until
Yep,
you get that breakout.
right.
Yeah.
Yes, yes, that. One question, guys. Just want to check because all this session I'm trying to see is my mic okay. Do you hear me well, or there is a problem with my mic?
Igor, no, it's way better now. I think when yesterday when we started, it was very dull until we asked to if you can turn it up.
Yes, yes. But
When you
now,
joined today for like 2 minutes, it wasn't, but now I hear you perfectly fine.
yes, yes. But because it's not by me, it's not, nothing. I didn't do nothing different. Just problem with something. So
Yeah,
maybe
it's all looking.
yes.
Yeah,
I
you
can hear
sound
you
fine now.
perfectly.
Yes,
Yeah,
Yeah.
this
yeah.
is good. This is good. No problem. No problem there. So I see right now that we have a new push in British pound dollar, and I see the new high for today. We are right about 1.2950, which means that we can see the new target 1.2970. Maybe we can go at least 20 pips before the Trump announcement. So this is very interesting right now. This whole day is bullish for euro dollar, British pound dollar, and all US dollar crosses. So I think it will be interesting, but no positions to enter into the trade. This is the
Yeah.
problem. This is the problem. This is not the good moment to enter into the trade at all. So we can only watch this. But I want to repeat, we're still in that range. Up to 1.2970, we're still in that range, which is very, very difficult for trading and for setups and for everything.
Yeah.
So unfortunately, I will just watch this. And of course, no revenge trading, people. Avoid that. My mind talked me different, but I just want to tell that this devil that talking me to revenge my today's loss. I will not do that. So this is evil
Don't, Igor.
forces. Yes, yes. This
So,
is
Igor, what time is it at yours again?
what is the time zone? Eh?
Yeah, where you are. What's the time there now?
Uh, the time is 4:45 p.m. on my side.
All right. See, the same time as me. Okay, there we go.
Oh, yeah,
Nice.
you're in South Africa, yes?
Yeah.
Yes, yes. This is it.
Mm.
So beautiful,
Yeah, we
beautiful.
might have to wake up tomorrow, Igor, and see how things have worked out, if anything
Yes,
happened.
yes, yes.
Because 4 p.m. is way too late for me. I'm definitely not going to be sitting watching a president speak. That's for sure. But
President of different country. Yes,
I might be drinking a glass of wine rather. Yeah.
yes, yes. Of course, of course.
Right, gents, I think we reached the end of our session. It is 1:45. Do you guys have anything else to add? If not, then we can end things here. We're probably going to be in a room again tomorrow together,
Yes.
hopefully.
Yes.
Yeah.
See how things are playing out.
Yes.
Nandan will be
Okay.
there to witness everything live. He
Yeah, I
already
can't wait
woke
for
up
it.
3 o'clock his time, so I don't know if he's going to still be awake, but we'll see.
Yeah, we'll
Yes.
see.
Yes. We'll see. Yes.
Yeah,
Yeah.
So we'll see that.
All right.
awesome.
Well,
Okay, gents.
it was good speaking. Yeah.
Yes. I
No,
wish you a
have a
great
good
day,
one, huh?
people.
Cheers, Igor.
Yeah.
Cheers,
Okay.
Nandan.
Cheers, guys.
Take care.
Bye bye.
Bye.
Howard, Paul,
Hey guys, how you doing?
good and you. Good to see you
everyone.
again,
Howard,
Howard.
great to see you.
Good to see you. How's your day so far?
Yeah, not well. I'm not sure who you're talking to specifically, but mine's been okay so far. Thanks. We actually had a question earlier this week asking how's Howard. So, and we didn't know. So this is a good time for you to tell us how.
Someone
I'm
was
good,
concerned
yeah.
about you in the comments, and we just said we didn't have proof of life, but we thought you're okay. So it's good to see you.
as far as I'm aware, I'm okay. So, but particularly now we've seen some volatility in my markets for after all this time.
Yeah. I see the pound US dollar is making a move to the upside. I still feel we're in that range, but it will be interesting to get your thoughts on it, Howard, because I know that's one pair you look at as well. I just want to.
Yeah.
Sorry to interrupt. I just quickly want to show a trade that I placed earlier on the NASDAQ. And I left the entry and the exit points here, just so you can see exactly where I entered and where I took the profit. So this was an interesting one. If you look at my entry point here, this is the candle. It didn't quite touch the VWAP line, and that's usually an entry. I would wait for it to go very close or at least touch that line and then reverse from that point. But the reason why I took this trade is if you pay attention to this 15-minute candle here, the point of control is right on the resistance line, so you can't see it. But this is resistance lines there. Okay, so that's the first thing. And then, as you know, I look at the multiple time frames and I look for confluence. I want to see like bullish action on all of them. So this candle here was the 3 o'clock to 4 o'clock candle. In other words, my local time. So half an hour after the market open is also part of this candle. So half of this candle is half an hour before market open, and the other half of this candle is half an hour after the market open. And this is the half an hour time frame. This candle closed at half an hour after the market open. Okay, so you've got this bullish candle at the close. You've got this breakout. You see that little arrow? It's breaking out of resistance. And then on the 15-minute time frame, you had this more like a doji almost, but it's a bullish candle. So the new candle immediately pushed lower on the 15-minute, obviously in all the other time frames as well. And when it pushed back in here, now Howard, you will know that when there's an upper shadow like that, there's a high probability for it to trade into that shadow, because this is something I've discussed in previous sessions. And also the fact that we've got a resistance area here, so there's definitely room for this to go, somewhere close to that resistance area. So I've entered the trade when it made that little wick and pushed back to the upside. That's why I took that trade. And the take profit was at the point of control. The stop loss wasn't quite at the low of this candle, which is typically where I would place the stop loss. And the reason for that is because I have a fixed stop loss of 100 ticks, so 25 points. So in futures, there are 4 ticks in 1 point, right? So in other words, if my stop loss is 100 ticks, that's 25 points. That's fixed. My take profit is also fixed at that level. But then what I typically do is, like, as soon as I enter the trade, the take profit and the stop loss is already set because I have a bracket order. And then I will just move my take profit further away. So I make sure I always take out more compared to what I risk. So anyway, this happened to be more than 100 ticks, the low of this candle compared to where I entered. And that's why the stop loss wasn't right at the lowest point of the candle. Does that make sense?
Yeah, it's too big for the normal risk kind of thing.
Yeah, exactly. But that's because of the ATR of the 1 minute candles. They were just bigger than usual. So that was the trade I took, and then it did eat the resistance level, and then it came back down, and then it presented me with this opportunity here, which did go to the VWAP line, and then you got this nice bullish hammer candle. But this one I didn't take because for me, even though coulda, woulda, shoulda, perfect trade, right, all the way to the 1 standard deviation, I didn't take it because for me the opportunity was on the way to the resistance line on the 15-minute. Does that make sense? That was, and it did go there, and then it pulled all the way back down. So I just felt a little bit unsure, to be honest. So I'm like, I'm just going to leave that one alone. But it did work out. I just didn't take it. So, but that was the trade for today I took. So just the one. And yeah, I mean, I was hoping to say, come into the session, say, look how beautifully I left that trade alone, and this is the reason. But it's a trade that did go all the way to a very comfortable level here, which is the one standard deviation there. Okay, so that was the trade. But I'm not sure if that makes sense. Do you have any questions on that? Do you understand why I took this first trade and why I decided not to take the second one?
Yeah, that makes sense.
Yeah, all good.
Yeah. Okay, so that was my trade there. Then I'll just quickly show. I know this is the pound US dollar, and this is going to be a very interesting conversation. I'm glad you in this session, because I know you look at the markets slightly different. You have a different strategy. You look at Elliott wave theory.
Yeah.
So it's going to be interesting. Now, for me, there was no entry. The closest this got to a support level was this daily range low. And it didn't quite touch it. It missed it. But I did manage to get a trade that I did record. I think, Paul, you were in the session when I just played the video. Yeah. It was basically just a very, steep incline or climb. And then it pulled back, and I just took a trade in the same direction on a 50, or was it a 61.8 Fibonacci retracement level? Or maybe between the two, if I remember correctly. That was the only trade, the only setup I got out of this entire range. And now it is pushing higher. But the way I trade is there was no entry for me. I was hoping for this to pull back lower and keep, to get a really nice entry to go to the upside. But for now, well, it's clearly pushing to the upside, but we're still in the range. So for me, this is still not setting up for, I'm not interested in this right now. If it does go up and break this high, then I would start to become interested in it, for a pullback and look at the different time frames and so on, and see if I can get an entry. But yeah, so and then the final one, Bitcoin, and Paul, I know this is your baby, but Bitcoin is at a very, very interesting level right now. It's yeah. So this could be just now. Now it just depends on price action. We want to see a rejection, hopefully, or ideally on the daily time frame. Really, I don't know what you think about that, Paul, but obviously you'll get your shot to explain exactly what you look at. But it is pushing quite strongly. So you want to see a very clear rejection there. But today it's definitely pushing up. And we did expect this. I think, what was it on Monday, Paul, when we saw this level, we say the probability for this to go high from this point right now is pretty high.
I mean, it's a simple case of, the sellers are there. That's where it needs to go, right? And it's the next line in the sand. It's making some moves today. We can talk about it a bit later. But yeah, right now, obviously, it's very few trading opportunities at the moment. But there's a potential short trade there. But while you're negotiating, trying to wait for whatever's going to be announced in a few hours' time, it's going to be a bit of a difficult proposition. So yeah, certainly a nice little pocket for sure.
Yeah, definitely. So if we can get some rejection there, that would be great. But we always talk about scenarios, and that could, there's two things. Yeah, it could just continue to the upside, obviously, or it can reject at this level. And if it can reject here with some, how can I say it? Like some aggressive selling, if it can sell off quite aggressively from this level, that's another thing we spoke about. Then we can expect lower levels. We don't really want that, do we, Paul? But
yeah, I mean, it's like right now. I mean, it's sheer exasperation with a lot of the markets, and it's really quite a simple thing right now because we've got to be so cautious. You got to make sure you're shorting with as many sellers as possible, which is in that pocket, and then you've got to wait for a long until it comes down. Maybe all the way to the 0% retracement. So this is the game right now. We can't play any games. We've just got to make sure we're with the masses and we're trading like that. There's no time for, like you said earlier, about you're a bit cautious about entering your trade. Absolutely the right thing to do, because you'll miss an opportunity. That's fine. But if you get it wrong in the market at the moment, it's going to mess you up. So extreme caution, I think, at the moment.
Yeah, no, I would agree with that. But I think we all can agree that this is definitely a critical level. So it's this is an ideal area to start to wait or to watch the market and see how it behaves at this price point. So this to me is very different to, say, the pound US dollar, where I don't really see that, except for I do see that we are at a resistance level here. Do you see that? It's almost like it's been ranging, almost like a little range within a wider range. So we are in this little mini range. So we'll see what happens at this point. But we do have this, what's that thing called? The tariffs. The tariffs, 4 p.m. Eastern. Trump is going to announce or is going to make the details. Because, I mean, the news already came out a while ago. But there's still not everything, not all the details are out yet. So there could be some surprises there. Don't know. We'll see.
I've got a pretty good summary and a pretty good chart we can look at later. Not a price chart we can look at later, because again, it's going to be quite interesting. But yeah, we've got stuff we can get into with that for sure. I don't quite know where I got this chart from, which I'll show a bit later. But I don't know. I mean, Howard, like, how are you feeling about this? I'm just going to say, I feel like I need to use words to describe it, but how are you feeling about this normal announcement later?
I'm feeling a bit fearful of trading ahead of it. That's what I'm feeling. I've closed everything out on my side, so let's see where the dust settles tomorrow. I think.
Batten down the hatches.
Yeah. But as everyone seems to know, my view is dollar negative. I think today we started to see the early stages of the move. So maybe we'll get another shot at it tomorrow.
Yeah. I don't think there should be no fear of missing out on any opportunities. If we can get clear direction, there will be plenty of opportunities.
Yeah.
To get in, because we just want we just need to get out of this range. We really need to get out of this range, because it's so difficult to trade. I mean, I nearly got myself a hat that says, make GBP USD great again. But I thought that might have said Paul. No, I'm just joking. But this is a horrible range. I just don't like this range. It's a very, very difficult to trade. This is an area where you can very, very easily suffer from, what's that saying? Death by 1,000 cuts.
It feels like
it looks like it's going to go up. Yeah, that looks good. You get in, and then you get stopped out, and that can just continue for
bit of whipsaw mania.
Yeah, so if we can just get out of that, then that would be great. But the monthly time frame made a very small lower wick here, and we are trading into the shadow now. So if it can break that shadow, then that's also the resistance on the smaller time frames. Obviously, that nasty little range. But I did honestly expect a bigger down, a deeper, steeper wick, but we're not getting it at the moment. But again, we'll see what happens this evening. So sorry, Howard, I think you were just breaking up.
For me, that support zone.
Sorry, you want to say that again, Howard? Sorry.
Yeah. I'll say the on the daily chart. Can I just whack mine up for a sec?
Yeah, sure.
Well, look, let's see what we got. Yeah, so we basically been since struggling up here just above 130 the figure. We've had this kind of pulling back into these kind of previous higher lows within the uptrend, and it really seems to have absorbed this kind of selling pressure. So down, up again, down, up again, down, and now we're starting to break up again. So obviously once we clear these guys, then away we go. I think that's what we're looking at on this thing. Major trend up, correction against the trend, it goes up. That's the way I see it.
Yeah, I agree. My bias is definitely long, but in terms of waiting for, what do you have any specific levels that you were looking at, or you were basically just looking at the daily chart? You saw that engulfing candle, for example, and that, I mean, if that's good enough, then that would make sense to me. But were there anything particular that you were waiting for, or because well, actually you're not in a trade right now, are you? You did say you're not in a trade.
No, no. So actually, I was long over on the. Okay. Yeah. Yeah. So basically, I bought on the rebound from yesterday's low, and then I basically sort of took some profits over as we started to break higher today. I entered a long euro on the break up. I think it was 108.10 or so, and grabbed a few pips on that one. But for me, my kind of trade of the day was shorting dollar yen in the morning. Which I actually recorded, funnily enough.
Oh wow! Nice.
The first one I've recorded. My trades tend to happen very much in slow motion. So let's let's have a look. See if we can. Okay, let's have a look. Stop sharing. Present. Share screen. And let's see whether we can. We have the technology. Let's have a look. That seems to be still on that one. Hang on. Second. Right, is that the one? Let's try that one. Share. Okay, hopefully that should come through shortly. Not coming through?
Not yet.
Yeah, I'm sharing it. I've got the stop sharing button, so it's somewhere between. Oh, there we go. Got it.
Yeah, that was me. That was me. Sorry about that.
Oh, no worries, no worries. Yeah, so basically, I came in and I was looking at 150 to pretty much cap the upside or thereabouts. Big resistance up at 150. So we got the kind of little nibble higher in the early kind of London session.
Oh, it sounds like you're under the bath again.
So basically, oh, hello.
Yeah, you were just sorry. You were just breaking up.
Again.
Yeah.
No worries. Yes. So yeah, I went short on the break on the other side of the range, 149.64, with the target down at 149.28. So it kind of, let's have a look. It nibbled down. It hit the sell stop there. So I'm short, and then sideways. Then it starts to break, pulls back, sideways, pulls back, and then comes back down, and then eventually hits the target there. So yeah, my stuff, it tends to take a lot longer than your stuff. Your stuff is very kind of like a few minutes maybe. Mine kind of took place over a few hours.
Oh, mine? Oh, you're talking about the
yeah. Sorry, yeah, yours, Jannie,
yeah.
But yeah, so obviously I'm bearish on the dollar, bearish on dollar yen. I was looking for 150 to pretty much cap it, so I waited for the turn that I was looking for, that intraday failure where the London guys buy the breakout, they get smacked, and then as we come through the other side of the range, they're bailing out of their long positions, and that gives you the squeeze. So that really was my kind of trade of the day.
Nice.
Plus the other ones I was holding overnight, but I just grabbed the profits and
Okay, very nice, very good, very nice. Well, what's your take now on the dollar yen? If you look at obviously we need to get just today out of the way, but tomorrow, Friday we've got NFP. Yeah, we'll see what impact that has on the market. I think today might be slightly more important, but the dollar yen. Sorry to interrupt. Looks like it might be
for me the yen cross. Yeah, I was going to say for me, you're talking about dollar yen. The thing has bounced back a lot harder than I would have liked from a bearish perspective at the moment. So I've got no reason to be selling this thing right now. So I think it might be another one of these things where we come in tomorrow and we see where we are. But at the moment, the yen crosses have got a bit of upside momentum today. And I think they kind of gut with the stock market a lot of the time.
See, this is I think this is actually one of the coaches. I think it was Igor. He was watching the dollar yen as well. I'm pretty sure he had like a trend, yeah, something like that. And then he had that breakout, but he was met with this immediate resistance. So
Yeah, that's quite
I mean,
stiff.
yeah. So I mean, I don't think it's completely impossible for this to go and test this resistance level again, because you are outside of this this channel, or this this trend, and then this could potentially break this resistance area. Then you could set up for something bullish. What's your thoughts on that, Howard?
Yeah. We keep cutting out. So, okay.
Yeah. So what are your thoughts
Hello?
on that? Yeah. Okay.
Yeah. So yeah, yeah, I agree. I think in the short term, it's got a bit of upside momentum. It hasn't stayed down. It should have stayed down to, I think, continue the move down. So yeah, we could see an upside probe. But again, there's that big resistance level above the market there. So that would be an interesting place again to think about having a crack at the short side.
Oh, you think? Okay, so okay, so you will actually be looking for shorts. So your bias is still short, then, obviously. Yeah. No, it makes. I'm just asking what your take is on that.
It's a bit of a difficult area, because there's another. I think we looked at this same thing yesterday, right? There's a diagonal line as well. So there's a couple of resistance lines, and then obviously we've got support, and then we've got range just below. But it's a difficult thing to trade, really, because you're stuck between the buyers and the sellers, and it's like, which direction do you go? So we need to wait for a move, right?
Yeah, I agree with that. You see, the weekly time frame.
Yeah, it's a bit.
Yeah, this can very easily trade into this upper shadow to that resistance area, and the monthly. You see, now this for me is bullish. Let me just remove this line, yeah, because of the when the body of the candle closes inside the wick with such a long wick, yeah, that to me is always bullish. But like, if you look at the actual structure, it's bearish. Do you see that? And I wonder what RSI would look like. Let's have a look. Indicators, oscillator. No, there's no divergence there. Anyway, so for me, I'm also like, I agree with you, Paul. It's a very difficult one, because I just get all these contradictions. I get contradictions on multiple different time frames. So I'm like, I don't know what to do with this one. So I always, it's always helpful to get other people's thoughts on, especially if they trade a different style, they have a different style of trading the markets. Then it's always interesting to get there.
Would you mind just scooting back to the chart you were just talking over, the time frame you were just talking over?
The monthly?
Yeah. So when I'm faced with problems like this, I'm seeing a little bit of a symmetrical triangle. So if you could put a diagonal line just under the bottom of the macro recovery we've kind of got, just
this one, yeah,
just to form a little triangle. No, not horizontal. Just a.
I like my horizontal lines. Okay, let's have a look. I even call them okay, like that.
So I mean, I would try, and the reason why these triangles are so good is because when you need a line in the sand, is it going to go left or is it going to go right? And you need some way of quantifying it. So that's the way I would look at it, because you've almost the resistance to support line, whatever, is kind of right in the middle. So I would use that as a signal. But I'm not saying you could trade both ways. I think there's a bearish bias for sure. But I think looking for some lines in the sand you can trade off, because I mean there's nothing to trade right now. It's just we need to see what happens. But yeah, that's what I would do.
Yeah. And how would you do? Okay, this is also if you are bearish on the dollar, then shorting the dollar yen would make sense, right?
For me, the whole thing is.
I'm sorry.
Yeah, I was going to say the whole thing. The whole thing for me is a topping structure. So that
Yeah.
the initial those three candles on the way down from the swing high, then a kind of excuse me, like a three-legged ABC type correction higher, which didn't make a new high,
Yeah.
and then we kind of break down a little bit. But
Yeah.
this looks like just a little pause before we break down again for me.
Mm.
Yeah,
Well, that
difficult.
makes sense.
I'm probably leaning towards that for sure, but it's a difficult one. So yeah, rest on your triangles.
Yeah.
Yeah, this is the monthly time frame though. So, but I think just the way I see it, I do think we're going to get maybe this is going to break potentially, and then I don't know where it will find resistance because it's not clear to me. Maybe if you draw, well, there are several points you can, this is obviously the resistance area.
There may be sums there.
Sorry, I'll be with you now. You can put some flip levels in here as well at the 38. It could because I was identifying this area here as also just pure price action. That's also a resistance area, very close to the 61.8, and then that could make for a really nice short if you get this break.
Yeah, I think we're definitely in the territory where we're always talking about to students about forcing trades. I think we're in this whole conversation now is kind of in that territory of trying to search for the opportunity, and I think it's a little bit I think when you look at something and you step back and you just think, yeah, it's not ready, it's not ripe, that's okay. It's okay, just find some. I mean, it's not as easy for you guys because I've got thousands of cryptos I can go and trade, right? I don't care if Cookie isn't crumbling in the way I want, right?
Yeah.
So you guys have less options, but for me, I would just I'll put it on the back burner, set a few alerts, ignore it,
Yeah, that's definitely the right way to do it. But I would not for me to short this because the bias is on the longer time frames is short. I never if I'm waiting for a really good level, I'd never take long trades to the level where I would like to short because it may never get there. Right. But if I do get that level, this is exactly the same with the pound US dollar. I was waiting for 2 long weeks for this thing to just give me a decent entry. It just never came. Well, I say never came. It did come very, very close to the bottom end of the daily range, right? Which is over here, right there. Right. Well, if I draw it like that, it looks like it did touch it. But if you do it properly, it missed it. So that came very close. So this is arguably, that was the point to get in if you're willing to stay up all night. Because in the morning, I don't know do you stay up overnight, Howard, for setups or not really? Do you have alerts or how do you do it? Howard?
Sorry. The connection keeps disappearing.
Yeah, is that dial-up connection of yours, man? You need to get broadband. Yeah. And I'm just teasing, but yeah, when you get
the old-fashioned ideal internet thing. For me, I'm always looking at. I'm always looking for trigger levels where people are trapped, which. Kind of yesterday that was kind of my kind of trigger to get in on the long side. So I'm always, and same with the dollar. Yeah, and one that we just looked at. I'm always looking for that kind of. I want to see people trapped on the intraday basis, and that gives.
Okay, I think I have a rough idea of what you said. You're waiting for people to
We've lost Howard. Oh dear.
Okay, so
I think
Andre
had some foresight.
Yesterday, Google Translate played a trick on me. GBP USD, nothing has changed. Yeah, I mean it's obviously pushing to the upside. But as we maybe you joined a little bit late, but we're still in this range, obviously, and there's no real good opportunities unless you. Howard mentioned about he likes to see traders trapped. and I guess he means by this little, it looks like it's going to fail, and then
Here we go.
this candle up here.
Howard's back. Good.
Is that
Yeah.
any better? Hopefully.
We'll see.
We'll see.
Have you
We'll see.
spoken to the guy in the satellite truck?
Yeah. Oh man. But nothing has really changed. Beginning of the year, many bought Solana with high expectations. What is the vision for Sol? Is that crypto?
Yeah, we'll get into that. Yeah.
Okay, yeah, we'll get to that in a
Solana.
moment. Yeah, but
but just on the quick before my connection disappears again. Nothing has changed for me on cable sterling dollar, except the fact that we've made the break higher this morning today has confirmed a higher low on the within this range. So for me, it's like we're getting ready to go.
Yeah. I actually thought at this point, we're getting ready to go, and then we didn't. Maybe this time it will break through. I think it will be. Andre, I think you mentioned that Wednesday is going to be a big day. It was actually supposed to be. It was actually supposed to happen yesterday, but Trump said no. He doesn't like the idea that it's the 1st of April, so he made it for. So he made it for today. Like, okay, well, anyway, so we'll see if there are any surprises, but I think. Well, I don't know what to think, to be honest. I know the tariffs on the imports on things like cars and many things are known, but there are also a few things that are not known. So I think
But George, should we get into it? I mean, should we get into it? And then Howard, have you got other stuff to show a bit later?
Yeah, I'll come back with some other currencies and things. So yeah, you go for it.
Yeah, so let's do that. Let's jump into this Liberation Day. And then Howard can take over, and then we'll end with a bit of crypto. So let's try that. So let me I'll just read off what I've got. Can you see this okay?
Yep.
Yeah.
So just let that be a backdrop, okay? Just so you can have viewers can have a look at that. But just so Trump, just for people who are unaware, Trump's Liberation Day announcement is set for today at about 4 p.m. Eastern time. And the key points, which I've got here, is he's going to do it from the Rose Garden. There's 3 options discussed. There is a 20% universal tariff. There is a reciprocal tariffs by country or targeted tariffs on selected nations. So there's 3 potential options that we can see. 20% universal tariff, reciprocal tariffs by country, or targeted tariffs on selected nations. So that's essentially, are we going to target the world, or are we just going to target China and Canada? Because Canada, terrible people, they should be punished. Retaliation is expected, of course, against Mexico, Canada, China, Japan, South Korea, and the EU. What an interesting bag. Additional tariffs on Russian oil if there's no Ukraine deal, which there isn't. And then there's threats of bombing Iran if no nuclear agreement, which is, I can't believe I just read that. That's pretty hardcore.
That is, yeah.
Yes, just whatever. Just skip over that. We don't need that kind of nonsense. Total potential impact is perceived to be about 785 billion globally, with 606 billion impact on the EU, and maybe half a trillion from China. And the idea would be that the administration has said that the tariffs will take effect immediately after the announcement. So there's so much we don't know, but I think what they've said is the 3 options discussed are Chaos 1, Chaos 2, or Chaos 3.
Okay, well, there you go. So we'll get some clarity at 4 p.m. Eastern, which is
Howard,
10.
what from your perspective, what are your thoughts on this? Have we still got Howard?
Is that a wax doll? Howard, is that you?
Hello.
Very keen to get your thoughts on
Okay,
this.
so yeah, on tariffs and things.
Yeah.
As I say, I'm trying not to think too much about things like this. I'm much more. I want to see the news hit and then trade the price action.
Yeah. I think the bigger picture here is this needs a separate podcast, to be honest, and I'll get that sorted. But this is essentially, I think, the issue which we're trying to make sense of. So in the United States, there is a solid argument that the current status quo isn't working. For decades, China has been flooding their market with cheap goods from a communist nation, which a capitalist nation struggles to combat. And there is an imbalance there. There is an unfairness there. And the world has changed dramatically since the pandemic, as an example. So what ideally, you want the US to do, and businesses will probably agree, is that they want to see legislation passed to either refine trade agreements like the one Trump signed with Canada in his first term, and if there's going to be tariffs, we want to see them legislated. So it takes 6 months to 12 months to legislate. It's got to pass through the House, it's got to go to the Senate, it's got to be signed. We have a lot of time to scrutinize any of these moves, and then businesses have time to then essentially adjust their 5 to 10 year plans, which of course they do plan that far in advance at the very least, without too much concern, worry, or impact on the economy, right? Because it doesn't really matter what we do as long as we do it in a controlled and sensible way, and then you can shift maybe your issues to deal with China, that ongoing threat, and of course renegotiate some trade agreements with Europe if you feel there's been some issues, which there hasn't really been. That is an ideal scenario, because that also then allows for, if the whole premise is to get manufacturing to come back to the United States. Just one example would be during the pandemic, the United States, like many countries, realized they don't have their own internal supply chain for face masks, right? So, this is something which, has to happen in slow motion. It has to happen over time, between 2 and 5 years, so businesses can adapt. And then that gives time for new factories to be built, right? Just like Reagan did with some of the Japanese car manufacturers in the 80s. But he did it in such a way where the United States ended up better off for it, with some of these companies, Japanese companies, building factories in the South, in Texas and so forth, and getting a decent kind of balance without shaking the world order. But what businesses don't need is executive orders, because one, they can change from day to day, and then the next guy or the next woman who comes in to be the presidency can just undo it. And when you've got businesses trying to plan their next 5 to 10 to 20 years, it's a nightmare. So this is the context. It's not really about the ideology behind it, if there is one. It's about, not using the right tool in the right way, which is why we're in this position of chaotic nonsense in the economy. I mean, any thoughts on that? Any different takes?
No different takes. I'm with Howard. I'm just waiting for the news to come out.
Well, what was the point of that monologue?
Whatever it is, it's still a negative. It's still a negative, whatever it is.
Yeah. Look, I mean, I wouldn't be surprised. I mean, I always say I wouldn't be surprised, because this is the market. Don't be surprised by anything the market does. But if this news comes out, even if it's dollar negative, for the dollar actually to rise, and have you seen that before? News events like that, where it's a dollar negative, but the dollar strengthens, and then the next day it starts to move into the dollar's favor. It doesn't happen immediately, because that's a little bit too obvious.
I think this is the point I was trying to make. It's like this kind of paradoxical impact, because we've got, as Andre's just saying, Paul, several countries are saying they're retaliating on tariffs. Of course, yes, trade wars are bad, right? Of course, we don't want that. But there is a level deeper, and that level is consistent uncertainty from month to month. So have your tariffs if you want them, but then just stick to it, and then just let us adapt, because it is the chaos which is causing an additional depth to the problems. So there is economic issues as a result of the tariffs, but there's also the fact that the way they're doing it is causing more chaos than needs to be. If you roll out a plan slowly, you talk to businesses about it, and this way is what's going to cause these paradoxical results, which are very difficult to trade off. So it's going to be very interesting what tomorrow looks like, for sure.
Well, I'll definitely be watching this evening to see how it's going to behave. But yeah, you're right. Hopefully, we'll get some direction. If we can just get the markets to move again, a little bit of certainty would be great. because it's not been great the last 2 or 3 weeks.
Yeah, because
not,
I mean, it's like if you know you're going to hell, you can at least enjoy the ride, right?
yeah, exactly. Exactly. So,
Howard, what you got?
yeah.
Yeah. So just a couple of these other markets. 1 second. Let me just get my screen on there. So it's just okay. Okay. Just Oz Kiwi and Canada really. So these ones have kind of lagged a little bit while the euro and the pound were going higher. They weren't doing a whole lot to the upside, and I think that kind of coincided with the stock market falling out of bed. So they've underperformed the European currencies while the stock market has been falling. So it looks to me, I mean, the overall trend is down for the dollar still, even against these currencies, but they're kind of going at their own kind of pace. So this is Kiwi. We've had major low here, the swing low in Feb, start of Feb. So swing higher, correction, swing higher, correction, bounce off of this trend line, and we're starting to get a little bit of upside momentum last couple of days. So it's not really doing exactly the same kind of thing as euro dollar and cable. As I say, they tend to do their own kind of thing. So this one I think has made its higher low within the uptrend, and then we start to head higher. That's Kiwi. Aussie, similar kind of idea there, based out on the same day, end of the downtrend, first leg higher, pull back, and we've basically been in a bit of a range since, well, pretty much again since the stock market has been falling out of bed. So Aussie is just stuck in a range, but I think consolidating this first leg up. So again, I think we're up towards the top of the range, and eventually we break higher as the major downtrend in the dollar starts to affect everything. And Canada, a similar situation there, where again major high on the same day as the other two, first leg down, corrective bounce, and we're settling into what looks like a bit of a descending triangle, I think, over the last several weeks. So there's the kind of flat bottom down there, lower high, looks like yesterday was the lower high within that range. So I'd be looking for this to kind of gravitate towards the support line and eventually break on through. So yeah, just weak dollar. These ones at perhaps a bit of a slower rate than the Europeans.
Yeah, when did you move over to bar charts, man? It looks like have you played Tetris before? Looks like
Yeah, I have actually. Funny you should say that.
It does.
Isn't that a new game? Is that
yeah,
exclusive?
It was brand new when I was 7. But anyway,
like a bit of Tetris.
Check out Miss Pac-Man. Just it'll blow your mind.
And we had the Atari before that, you know.
Oh yeah, the little joystick. Yeah, yeah. Sorry. Yeah. So I don't even know, what are we looking at here?
That's dollar CAD daily.
Oh, dollar CAD. Okay.
Yeah. So major high, first leg down, corrective bounce, and then we're settling into a range but making lower highs. So the sellers are really kind of taking over control, I believe. And
if we didn't, like, sorry, it's just a question out.
Yeah, go.
This is what time frame is this?
Daily.
Okay.
Dollar CAD.
Because if you're on the daily time frame and you see, like, okay, you can only draw that triangle after that engulfing candle, right? Which is basically that formed yesterday. Is that your entry? Would that be like that's your signal, or how do you kind of time your entry on these ideas?
So on this one, I like to get in after a narrow corrective day against. So if today, for example, finishes like where it does now, then tomorrow will be a great entry for another one of these down days. So I'd be looking to sell weakness after one of these little kind of begrudging corrective bounces. So we come in. Let's say we close here. We come in tomorrow. We start breaking down. I'm shorting it.
Yeah, that makes sense. It's exactly the same with the indices as well. The NASDAQ. When you have a really strong down day, don't expect the next day to be a similar day. You're probably going to expect a very rangy day, and the day after it continues. I see that a lot. If you don't mind, I'll just quickly show my screen. Yeah. Oh, okay. Yeah. So I'll just make this a little bit bigger. Come on, go to the edge. Okay, so this is the rejection of the 200 EMA. So we closed. I mean, we peaked above it, but this is actually, and when it comes to the NASDAQ, this is particularly true on down days, not necessarily on up days. But when you get like a really strong sell-off, the next day is always like most of the time anyway, you get like a very messy day. It's very difficult to trade, like day trade, and then the next day you get a continuation. This has happened several times. You see this drop here, and then the next day you get this doji type of very long wick that closes more or less where the open was, and then the day after it continues. Big day. Right, and then the day after you get another small day. So it's never like when you. Well, it's definitely when you trade the NASDAQ. When there was a very big down day, for example, you're just better off to stay completely away from the market the next day, because it will be very choppy. It will be very difficult to trade. Levels don't get respected, and it's just a mess. But if you're then, but, in that case, you need to have a very clear bias. So your bias is pretty clear.
Yeah.
You close below the 200. The next day is not going to do much. But now, we have the support level, and I really don't know what to expect here. I know we've got the 200 EMA as a resistance area, and that's as much as I got. And obviously we just moving away from the support area. But I'm definitely still bearish over the longer term for the NASDAQ. And that's what I say. And the 2 days after, we're making new highs. But you can just go with what's currently in front of you and what you read. And as the new candles gets added to the chart, it's perfectly normal and okay to change your opinion and your bias, because anything can happen at any time. So
you get some kind of intraday reversal that breaks deeply into the previous day's range, that kind of thing. That could give you an early entry into the next leg down. But at the moment, it seems to be kind of well bid on the pullbacks, doesn't it?
Definitely. Especially when you look at these wicks. This wick coming off the support, that's a pretty strong rejection.
Yeah.
So but today, obviously, it's not the end of the day, but it's pretty much it's a very small body so far. And I know it's still early. There's a few hours left before the end of the session, the market session. So we'll see how this candle closes. But it definitely looks like it's going to pull back in the short term. But maybe tonight it's just going to crash. We'll see what happens. We'll see what happens. But anyway, the point I was going to make is it's very similar to what you just said on the dollar CAD when I asked about your entry. Is that bearish candle your entry? And the answer is I relate to that, because that's very, very similar to when you trade the NASDAQ. I'm not sure if you find the same on Bitcoin, Paul.
It's a bit more of a gunslinging environment, to be honest.
The Wild West.
It is. West. I mean, it just is. Hey, look, Bitcoin's making some moves. So shall we have a look?
Yeah, go for it.
I got something to close with, so I can do this, and then we can close with some Bitcoin versus gold back in the 70s conversation. So that's what we call a teaser.
Teaser.
So to keep people to the end. So Bitcoin's making moves. It's doing it. So we've got a few multiple perspectives, right? And we're just going to go through them, because this diagonal line sits in slightly different places. But this is a 15-minute. And as you can see, we've had this consistent uptrend, and we've had this lovely volume pump today, firmly flipping what was resistance yesterday back to support, which is essentially one resistance level down. And this potentially is another one. But let's just check. So this is the, so this is the 4 hour. This is the pocket we were talking about, you know, with the 1 day, and we've broken above it. We haven't had a close, but we've broken above it. And now the sellers are like, huh? So this is pretty good. This is pretty good today. Just the bigger context, we need to come up here to really sell this move. But essentially, you know, and this chart looks a little bit more bearish. This still, you know, this is the pocket we were talking about, but these lines are different based on the different charts. Just so it's a bit ambiguity here. But if we can get above the 618 and we can get out of this pattern and we can come down and retake the 1 day, which hasn't happened yet. So let's just see what that would look like. This is the best chart, I think, to look at it. So we want something like just that. That's all we want, right? And just find the floor, right? And then we can attack this, because then we've got support below us, and then the 618 doesn't look as intimidating. But given the context of what, and this is, you know, this is the divergence we had at the start of the week, at the weekend, which is playing out quite nicely. But you can see on this chart very clearly, this is where we need to be. This is where people are going to start, celebrating Bitcoin's recovery if we get up here. And obviously on these charts, there are multiple charts. So we've got, it looks a bit more bullish on this chart for sure, but quite an interesting, Bitcoin loves to do this, right? But we're not out of the woods yet. So this could still come back down. This is just a wick. We need to find our feet. So this is still short on this chart, but really right now, you should just wait, because if Bitcoin breaks out even further, we've got a lot of volume, then, you know, we could retake the 1 day, and then this range is in play. But because of the news, because everyone's waiting, and because we don't know what's going to happen, Bitcoin could be dragged down by other markets. We don't know. So really, it's a no trade right now, but Bitcoin's doing all right. I'm pretty happy with this move. This is probably the chart to see how we react to the 1 day. This is just a 15 minute. But you know, can it hold? I'm not. Let's see if we've got another support line. We've got anything to allow the price action to. Yeah, this is quite a nice little bit of confluence actually, maybe. So let's just try and visualize what that might look like. Always try and visualize, fellow traders, in your heads what the move might look like. So maybe, you know, that's something we can hope for, right? And maybe get this 1 day. That's a bit difficult with the 1 day. So yeah, I'm not calling it just yet. You look at this chart, it's a bit more bullish. We've got the point of control back. We're above the 200 on the 4 hour, and we've wicked above the 1 day. So we need to wait and see what happens. But you know, we really just want to get on the other side of this pattern, come down here, maybe get some buying activity, and up we go. So, but you know, quite interesting moves from Bitcoin. But what happens later today will really determine it. And let's just check in with Ethereum, because this is a good barometer for the rest of the market, and I imagine it's quite cautious. Yeah, so we still haven't come back here. It's not really reacting to Bitcoin today very much. And let's just see if Bitcoin dominance is, yeah, so this is the problem. When Bitcoin dominance is going up and Bitcoin is going up, it's still, you know, you'll have some altcoins move for sure, but most of them will just stay still, like Ethereum, right? Or just slowly grind upwards, not with that much further, because in order for the altcoin market to move, we need Bitcoin dominance to be not doing this. We need it to be coming down. So in order to have, you know, so basically if Bitcoin did this move over the last few days, right, and then Bitcoin dominance was doing the opposite, it was coming down, then altcoins, Ethereum, would for sure be back in this range. Right, this is the game, which is why you should always pay attention to Bitcoin dominance. But let's just jump in to, if you guys don't mind, to just look at ADA, and then I'll look at Sol as well. So this was something we looked at, Jannie, yesterday, if you think you remember.
Yeah.
And since then, we were saying is this ultimately just, you know, we want to still a long trade down here because of the uncertainty in the market. But since then, we've printed this inverse head and shoulders, which is a slightly different proposition. And we've just poked our head above the neckline. Now, so there's a trade here for sure. And if Bitcoin can make it out, you know, make it down here on the other side of this pattern, then the premise for a breakout here is better. But it's not a great trade, this, because we've got the 1 day swooping in over above. And as you can see, my attempt to trying to figure out my risk reward, excuse me, sorry, was not particularly good. I'm not particularly happy with this. It's not the risk reward ratio I really look for, because ideally I'm really taking profits at the 1 day at this point, and this is essentially a 1-to-1 at the very least. And if we put it the stop loss where I really want it, it starts to the trade premise starts to fall apart. So if the 1 day was swooping down here, it'd be a different proposition. But there's a potential trade here, and maybe a stop down here, and maybe just trade it up to here. But it's a 1-to-1. It's a 50-50 really, and I wouldn't trade that. But we do have a strong reversal pattern, and we are breaking out. So, and we had a little bit of volume, so there's a potential trade there. But if you're longing it from here, wait for the retest, and then exit on the 1 day for sure. And what was it, Jannie? What was the other? Was it Solana? We mentioned. Was it?
Yeah. Let me just have a look.
Let's have a look at what Solana. Sol. Yeah, let's have a look at Sol. What was the question? Would you mind reading that to me?
It says Better Call Saul.
Great show. Great.
Brilliant.
What is the vision for Sol?
All good, man. Right. So let's have a look at Sol. Okay, there's volume. So we've got volume. This is just the 1 hour. Let's do this properly, right? We got time. Let's do this properly. Let's have a good, right? Because this, you can see, now this is a more bearish scenario looking at this chart. Okay, so there's an obvious trend line there. Let's make it white. So yeah, now we've just got that. Let's just figure out where the base is. Just very briefly, just to answer this question properly. Obviously, I'm just rushing through this, and we've got a level. Yeah, that's fine. We got bounce off there. So this is the range we're playing, and let's zoom back into the hourly and see if we can. Right. Okay. So, Howard, what are you seeing?
Looks basey to me.
Yeah. Jannie?
Looks basey.
Resistance, but pretty steep. It already traveled quite a distance there.
Yeah. It's
See that?
Yeah. That's not, because this is the thing, folks. So a lot of people will just check out Solana. They'll look at this and they'll see this. They'll see this candle and they'll see that it's potentially breaking out. Wait for a candle body close maybe, and they'll try and enter. But without the second we zoom out, we start getting a slightly different picture, right? So for me, this is just a bearish retest right now, and we're on our way back down. But let's just see if we can figure out any more information to give people about Solana, just to see what they're waiting for. What are we waiting for? So let's just clarify again. Base here, range here. A lot of reversals have occurred from this baseline. So this would definitely be a good place to long. And that means obviously a waiting game. And this is definitely the range. Sure, it's a bit ambiguous. You could argue that the range is a little bit higher, but it's the yeah, so it's a bit ambiguous. But let's see what other people are thinking. It's definitely a no trade at the moment. Interesting. People are trying to front run it. Yeah, I'm not seeing anything particularly obvious here. You've got a hard support buy, potentially an aggressive support buy, maybe, and try and catch a wick and just range this, trade this range. But I think this is very reflective of the current chaos in the market, and we really just need to see something else. We need to see. It's like we had a bit of a macro uptrend and we've lost it, right? So if we just draw a line here, it'll give us a better perspective on kind of the resistance up ahead. So a lot of sellers here, potential people are trying to front run here, but this is your first long entry. If it comes down here, this is your first possible long entry. Other than that, it's a waiting game. Any disagreements?
No, not from my end. What do you think,
No, one thing I'll say is, if the dollar is doing its breakdown from today, do the cryptos go up?
No,
not necessarily.
Is it really? I don't think it's that straightforward, though, is it? It's not really.
No, I mean, the basic thing is, so obviously risk assets do better with a cooler dollar. That's just the way it goes, right? But as we talked about context, the cooler dollar is a result of chaos, right? And therefore all the other markets are feeding the chaos. So you could usually, because like this is what we talk about with the altcoins. Typically, all the altcoins, Solana included, should be moving with Bitcoin with consistency, right? Ever since the November election at the very least. But Bitcoin's carried on its way and it's holding its own. But the altcoin market is just like Solana. It's just come up. So where's November? Yeah, so here's November, right? Here's the election. it pumped it up here, came all the way up here, and then Bitcoin's managed to keep this range, but the rest of the market has come back down. So I would like to say to everybody, yeah, we want the dollar to come down, and that's going to help. But the broader, specifically, that would obviously is better conditions for risk assets. But it's right now, it's, I don't know, I can't think of a metaphor, but it's because of the absolute insanity which is going on around the world. That's the factor which is holding the market back. So it doesn't matter if the dollar, just tanks now. I don't think it's going to be any help. What we want is the dollar to have a nice gentle move over time, with the market slowly, not natural movement. We're not getting that. So I don't think so, Howard, to be honest, but I'd like to be proven wrong.
Yeah, it's just that the dollar's kind of falling out of bed today, and the stock market isn't necessarily moving a whole lot from where it closed, and cryptos are going higher quite aggressively, or at least Bitcoin is. So I wonder whether they're linked. Could they be linked?
Well, maybe. I mean, have you got a chart, Howard, you can bring up? Let's dig into it, shall we? You got a chart you can bring up? We compare them.
Let's see. I've not got an overlay on there. I look at them kind of separately.
So
yeah,
I mean, because if you look at this chart, this chart kind of summarizes it really, right? So this is Bitcoin, right, since November 2022, right? So the end of the bear market, and the dollar has been ranging, right? And it's been ranging quite high. Bitcoin's been fine, but this has really inhibited the altcoin market, because the altcoin market is down here, right? This was the election run up, and it's down here. It's just not moving. So I think Bitcoin is going to be okay either way. I think Bitcoin is going to be more reactive potentially at the moment to just the traditional stock markets, if I'm honest. But yeah, it was a good question, and I think we should pay attention to it. But I'm not convinced it's too tied right now, because the dollar is a symptom at the moment, right? As opposed to a leading force, right? It's just a symptom of the chaos. So that's what I would say potentially. But
yeah, the only thing is there's not a whole lot of chaos in the stock market today, but there's chaos in the dollar. So
interesting. Let's zoom in.
They're moving on different things.
Jannie, have you got a better dollar chart?
I've got dollar index here, DXY.
Let's have a look. Let me stop. Let's have a look. Let's just dig into this. It's a good question, Howard.
Let's have a look.
Bitcoin is literally touching that much broader downtrend for the first time since the 21st of February.
Yeah.
So anyway, we just add this.
Okay, here we go. Yeah, this is dollar index. So it topped out middle of January.
Yeah.
And then started to trend down, then aggressively so here. So we've since seen a bit of a relief rally in the dollar, and now we're starting to tip down. It looks to me like we're heading down to new lows for the US dollar.
Yeah, so Bitcoin during that period has come down too, right? So Bitcoin has come down too. So it's kind of it's obviously followed the dollar, but I think
look, I mean,
I think that's reflective of the dollar is doing something unnatural.
The best way to do it
because of the conditions. And I think if the dollar had come down and everything was fine, then it's a different proposition. But I would argue that the dollar is potentially reactionary in this case, as is all the other markets.
Yeah, you see if you go to the, I'm not sure if you still have that the dollar index there.
Yeah, let's just try and get rid of that. Delete. Okay, here we go.
Well, if you click the split button, Howard, if you could split the split button just next to the unnamed save, we can maybe put Bitcoin side by side.
Let's see.
Left one, bit to the left.
So which one are we doing?
So you see there's a little square next to where it says unnamed on the left. So just if you get out of that menu, my friend, yeah, just click on that button. This is a great lesson for everyone paying attention, and split that.
And we'll do side by side. Huh?
Yeah, let's try that. Yeah, because it's a great question.
Well,
see what happens.
Let's try that one.
Yeah.
Okay, let's see.
I mean, this is what I've been. Well, we'll talk about. I'll close with gold.
Basic. Yeah. I'm on a basic plan. So maybe you want to do it on your one.
All right, let's do that.
That might be better.
Don't click leave studio. That's the wrong button. Right. Let's have a quick look. Let's try and this is a quite interesting question because we're always looking for confluence of sorts. Right. So BTC, US dollar. Let's put it on a daily. Let's see this downtrend. There we go. Let's split this up. Thanks for trying that, Howard. Appreciate it.
That's one.
Let's get the dollar up.
I'm more into TradeStation.
Yeah, sure, for sure. Okay. Well, apart from this move today, pretty the same, right?
Well, is that the same time frame?
Yeah.
It's not the same.
That's a bit different. Yeah, maybe it might be better to do them kind of overlaid the other way around. Horizontal rather than vertical.
Yeah. Good idea.
There we go.
And hopefully get them lined up. That'd be good. Let's have a look. March, May.
There we go. Is that a satisfactory alignment?
Yeah, that looks good. So actually, yeah, I mean, recently they're actually kind of correlated positively, aren't they?
Yeah,
they've been going
recently, yeah.
But for longer term, well, obviously the cryptos do their own thing a lot of the time, but
yeah, the dollar definitely historically impacts the entire cryptocurrency market minus Bitcoin for sure. It does that. I think we've had some very unusual. I mean, if I don't know where that chart is again. Find the dollar chart. So yeah, so this downtrend in the dollar during the last bull run meant that Bitcoin was climbing, as was the altcoin market. So that was 2010 to 2021, and so this was the altcoin market that time, right? So there was clear correlation. Basic risk assets just do better. But this time, and the same with the bull run before that, right? Strong downtrend, really organic. And the Bitcoin and the altcoin market were moving together. Now, though, this cycle, Bitcoin's been doing its thing, but we've had a slightly different. We've had just ranging in a hot range for the last couple of years.
So I guess the dollar came off of its peak, didn't it? So it corrected for quite a long period of time while Bitcoin was making new highs. So from the dollar peak to I don't know January this year, it corrected. While the Bitcoin went higher.
Yeah, I mean, Bitcoin loves to do its own thing, right? It's if you think you've figured out what Bitcoin's going to do, then it's going to mess you up. But yeah, interesting question. I mean, this is something we probably need to get into. But I think what we're talking about is like with risk assets. We've got the dollar, we've got a cooler dollar, fine. But the other things we need for the altcoin market, which is like stable trading environment, we don't have. So it's kind of irrelevant, really. I guess at that point. But yeah, Howard, what else you got? You got anything else? Jannie, you got anything else? What we got?
Well, I just wanted to ask the question: do you look at the dollar index? Because I can't see how you're going to use the dollar index to make better decisions on Bitcoin, unless I'm missing something.
Not Bitcoin, but the crypto market. So let's go back a year, right? A year ago, I was watching the dollar intently, and it was very relevant in terms of my altcoin trading, right? It was at the time, but this was before all of that chaos because so. But the thing is with Bitcoin and the crypto market as well, it has phases. So it's had phases in the past where it pegs to the S&P. right, for 6 months, right, and they just follow each other. Then it's the dollar a little bit, then it's something else. So it does change, and I think the question which Howard was asking is an important one, because we have to keep on our toes, and we keep trying to find what these correlations are. And right now, I don't have an answer, because it's just chaos theory, and we need stability to assess these things, because we've got one market reacting one way, then we've got another market reacting similar but slightly different and unique to them, and then Bitcoin's doing the same thing. So everything's bearish for sure, but it's like, which is going to recover quickest?
Yeah. You see, like, I just want to get back on the dollar index. Andre, you've mentioned that the dollar index lost at 104. Yeah. It's now trading at 103.758. I'm not really, I just think we need to get today out of the way, because just remember, this is the weekly time frame. Today's Wednesday. We've got 2.5 days left, or whatever it is. This candle's still busy forming. Don't let this make you think like it's definitely going to go down from this point. This is a candle still busy forming, and this could very easily close like a doji or anything that, that sort. For me, this engulfing candle is very strong. I was actually hoping for a pullback to a 105 area. I don't think that's completely unrealistic. I still don't think that's completely unrealistic. But as a candle forms, you can very easily think like, oh, it's failing, because if you look at this engulfing candle, right, like when this candle was busy forming, it was breaking the low of the previous candle's low. Right, so it was trading into this lower wick, into that shadow. Let me just take that thing away so you know which candle I'm talking about. Can you see it properly?
Yeah.
Okay. So as that candle was busy forming, it was breaking the low of the previous candle's low. At that point, you would think, oh, this is going to crash all the way to 102, maybe even further. And then it reversed, and it completely took out the previous candle. Right, it completely engulfed it. So just because we are below, I'm not saying it can't drop either. I'm just saying don't get kind of sucked into or think like it's definitely going to drop from that point, because I'm pretty sure that's already moved the ATR. Bearish pivot, yeah. If there's a bearish pivot, yeah, I agree with that. Yeah.
Yeah,
but,
I was going to say another one would be if you look at last week's candle with the long upper shadow, that kind of took all the fuel out of the buyers, I would say. I think they had their chance.
Yeah, I mean, look, if we look at Bitcoin, just to kind of illustrate the point, okay, maybe look at this Bitcoin last month. No, this is the other thing. We're having a flat bottom candle here, and for me that is a little bit concerning. But I mean, the smaller time frames, the structures there will give you a clear picture. But we closed inside the previous candle's lower wick, and that's always bullish to me. You could always expect to trade into the upper shadow. You'll hear me say that a lot.
Yeah.
But as this candle was forming, we first broke lower, and then we went all the way back up there, which looked very bullish, and then it reversed. This is a long way to come down. The candle only closes at the end of the candle, at the end of this time frame. So this is the monthly time frame. So this new month just immediately pushed to the upside. There's hardly any wick there. So I think the probability is very high for this to come lower, just based on that alone. Obviously, we know on the 4-hour time frame we're hitting a resistance area. It looks bullish for now, but there are two scenarios. It's going to break out of that range that it formed at the 61.8 Fibonacci level before it retraced. Okay, or if it breaks out above that, then that's obviously bullish. But if it doesn't, then you can definitely expect to form another, pretty large wick to the lower end before it potentially goes back to the upside.
Yeah, if you have a look, so to your left, you've got the two previous bull run peaks, right? Way in the middle.
Yeah, this one, yeah.
No, right in the middle. Right in the middle. There you go. So now look at the similarities between that price movement and look at the candle, the reversal candle. This candle this month is a very important candle, because if history repeats itself, and we could have that reversal, and this is what people are seeing. So I think you're right, Jannie. This candle right now, this month, might be make or break, right, for the next few months.
Yes, I agree with that. So ideally, what you want to see here is for this to come lower and then push back up, so you have a bullish close with that inside candle there. That's very, very strong. That's a bullish candle. That's definitely. So
and it's right on the old resistance as well, isn't it? Just above the old resistance.
This one, yeah. Yeah, exactly. So, but we'll just see it. This is only the 2nd of April.
Yeah,
and there's a pretty large move already. And the majority of these candles, I mean, I know it's like some of them can just take off, like this one over here just took off. But this is a very different time, right? Bitcoin was trading at, what was this price level? Yeah.
Like about 30.
Yeah, 32.
Yeah.
I remember when it went to 2,000, people go, it will never go higher than that. And then
I remember staring at it at $3,000 and not buying it. And I'm like, I bought it at 6. Okay. So, it wasn't too bad, but I was watching it, the pandemic crash. And I wish I could be the trader I am now then, because I would have bought that thing. I would have bought 2 of them. Right. Thank you very much. Right. I mean, look, shall I just show you my gold versus Bitcoin chart from the 70s? And because this is
back to the 70s.
No, I mean, look, man, look. We're talking about like a new world order, and we're talking about, like is Bitcoin going to be reserve currency like we talked about yesterday? I mean, let's just, if there's any currency which is going to replace gold or work alongside it, it's Bitcoin, right? So it's a relevant look for sure. But let me just, I'm interested to see what you guys think of this, honestly, because when I was doing these charts earlier and finding these patterns. So can you see this? Okay, I got a couple of charts.
Yeah, just hang on. I'm just adding it. Oh, I probably need to stop mine first. There we go.
Oh, there we go.
Right. So on the left, boys and girls, we have Bitcoin one day from 2023 just here. Now, obviously, we're here now, about 86. Okay, just for contrast. So look at the similarities from gold in 1977. Now, firstly, can I just point out, I'm very aware of the human condition's predilection for finding patterns when there are none, right? So let's just say this with a pinch of salt, okay? But they are similar assets, right? In the 70s, gold, right? It was gold. But Bitcoin now in 2025, it's considered digital gold. So looking at these sort of behaviors is quite important. So this obviously was February 2023. This is just, this is really the end of the bear market, and we started to make some moves, which was great. But this is where we are now with Bitcoin, and this is where we are now with gold, right? So
yeah, that gold move was insane. I mean, is it still going?
Look at that.
Yeah,
that's right. And just to, I mean, it's a little bit. I mean, it's difficult not to feel FOMO when you look at something like that. But this is another chart, right? A little bit clearer about the point I'm trying to make, right? 3-day.
Oh my goodness! It's like really a 1970 chart. I thought you were just joking.
No, I'm not joking. We need to. I mean, look. When we had the pandemic, we were looking back to the turn of the 20th century to know what to do, right?
Yeah.
So yeah. I mean, and here we are. And we're talking about Bitcoin and where are we going? Well, if it is the next gold, hello. And, if we look at it, obviously it's not relative, but the general idea about this bull run, if it does happen and continues, it's 250 to 300 on quite a few charts, this area. So it's not really out of the realm of possibility in terms of the similarities with gold. I mean, Howard, what's your take on this?
It looks to be, it's not going parabolic like gold did, with the inflation and all the rest of it, hyperinflation. It seems to be a steady movement up to new highs. Yeah. So that's the, I think up until that point, until it kind of had that consolidation, the last consolidation, not the one we've just been in, it looked pretty similar, but it seems to have slowed down. It's not rampant like gold was.
Yeah.
So maybe we need something really horrible, inflation wise to really kick it off.
Yeah, I just think it's just an interesting thing to consider, because other cryptos we can't have this conversation with. Bitcoin is has a finite supply, is a de-inflationary asset, right? And it is a great store of value. And it seems that, and because of its model, as long as it doesn't get hacked, right, or there's some crazy stuff which happens in the world, I've no doubt Bitcoin will be 1 million for sure, right? It's just how many cycles is it going to take to get there? Because I think, just to explain a little bit about Bitcoin, every 4 years, the supply, the amount of Bitcoin created is halved, right? That's called the halving, right? Now, we're going to slowly keep having less and less and less Bitcoin created. And as long as supply stays static or increases, which it is increasing at a tremendous rate over the last 2 years with all the ETFs and everything, the institutional adoption has been off the charts. Now, so we're not going to run out, Bitcoin is not going to hit that 21 million, because there's a maximum of 21 million Bitcoin which we can have. And I can't remember what it is today, but it will take 40 years to exhaust the supply, just based on how it works. But that will be 40 years of constrained supply and very high prices. Now, I don't know what that means as a digital asset, but what I do know, when we look at gold and we look at moves like this, and then you understand the fundamentals of what Bitcoin is, you give it the right market conditions, and it can go like that, and it could go like that, because every move like this, right, every move like this eventually looks like a move like this, and like this. You see, this move will be flat at some point, right? And this move will be flat at some point, right? Because right now in December, the last bull run in 2017, this was huge. This was mind-blowing, but now it's just a little nubbin on a chart, and it means nothing anymore, right? So,
can you do logarithmic scale?
Yeah, I was thinking about doing that earlier, but I was running out. Oh, that thing. Let's have a look at the logarithmic. See if we get a different perspective. Hello, log. Yeah. Bit more sedate picture, perhaps.
Yeah. Gold was really rampant, wasn't it? Percentage-wise.
So, food for thought for people paying attention. We're talking about Bitcoin and price. So it's important to understand that, we're talking about the altcoins aren't moving, but Bitcoin is. It's a very different asset. It has earned the status of a king. And, this, well, maybe in 10 years' time, we'll be looking at this chart from Bitcoin and laughing about it in the same way as gold. So.
You never know. The charts look very, very similar.
I know, right?
Very, very similar. Okay, so yeah, but I'm definitely bullish. But for this month, I ideally, if we can just get a nice little lower wick and then a push to the upside,
yeah,
that would be rock solid. I don't think it's very solid at the moment because of that. Just those 2 wicks, the 2 prior months wicks. And this month we haven't had a wick so far. It was only the second, but we are at that resistance area. So we'll see what happens there. Let me.
I suppose the lesson here is multi-time frame analysis. So we're obviously talking about. We'll see all of us hop between different time frames. Usually the minor and the intermediate trends, right? Just like the 1 hour, the 15, the 4 hour, the daily, but. Looking and waiting for monthly candle closes, as Jannie was suggesting, can also be an important trigger for market movements, right? So, zooming out even to the monthly can be very important. So anyone who's trading crypto should have a monthly Bitcoin chart. You should have a 3-day Bitcoin chart, maybe a weekly, and you should have a daily, as well as all of the stuff you're looking at for the just week in, week out, what Bitcoin's doing on the 2 hour, on the 4 hour, right? It's so important, because if you don't, you're going to miss signals, right? And that's what we're trying to. And I'm not suggesting you should be bringing up the gold 70s chart every time you want to make a crypto trade. But
you can. No, yeah. Well, this is such a. I do think. I don't know what you think, Paul, but if we break about this this consolidation, we could move a little bit higher first before we come down. This is this is a very strong pivot. So I don't expect, like, even if this, we could expect another range. Do you see that?
I think
there's a pretty strong pivot after breaking out of this this little correction wave in this broader downtrend.
I think, and we've got, obviously we had a couple of different. See, look, you can see, we're having a breakout right now. That's not enough yet, because that could just be a wick. A short trade, I think, is still in play, but over the next few hours, that might change, right? If we come up a lot higher and we find a base, then it's a different game. But I wouldn't front run this. I wouldn't try and capture this breakout, right? You got to presume that it's going to sell off, right? Because it's a strong move. You got to presume it's got to sell off until you see something different. And what that would be a move upwards and a nice support bounce, right? And then you're looking for the second bounce to enter, maybe something like that, a double bottom, some kind of reversal pattern. But right now, volume's there for sure, but on the lower time frames. But we need to see more on the 4 hour first before we do anything. So keep your eye on it, but I wouldn't, especially with the context of today. I would just get happy, be happy that maybe Bitcoin's finding the bottom and trying to break forward. But just when news days like this, it's up and down, whipsaw all the time, and you got to presume that, right?
Yeah, for sure.
It could get quite hairy later. So.
Yeah.
Yes. Yeah. We'll see what happens. I think, Andre, you did ask a question. Do we think will today be a reaction similar to a payroll or more relaxed? I assume you're talking about the tariffs. That really depends on what comes out there. It's like a scratch card, man. Anything can come out of there. You can win nothing, or $5 or $50,000. It's really unpredictable. We're just gonna have to wait and see what comes out there.
Yeah,
it's a bit tricky, very, very tricky. But I just wanted to look at gold.
Yeah,
gold is
which decade?
Today. Let's have a look at today. It's just, it doesn't want to, it's even right now, after this massive move we had this whole year, there was a really nice buying opportunity. Yeah, I think Michael. Actually, I think he took a short. Yeah, he took a short back to this level, and it was a good trade. I think that was his trade for the week. But look where we are now, and there's just no sign of this slowing down. Even the wicks here, it's just edging to the upside. Right? It's like it is crazy. Well, we had a bit of a bearish candle yesterday, but yeah, I don't know where is this going to stop. I suppose for as long as there's uncertainty, for now, until Bitcoin is a bit more established, is that the right way to describe it? And more people have taken to it. Bitcoin will probably be the next thing that people go to during uncertain times.
Yeah, I was just reading this. I was just checking the news, and Senator Ted Cruz, bless him, proposes a bill to power Bitcoin mining with wasted gas. So talking about, the process of Bitcoin becoming mainstream, it's happening, but it isn't digital gold yet, I think, which is the point you're making. It's not, but yeah, it's going to job interviews.
It's going to job. Yeah, I think for now, it's very evident, like during the very uncertain times, people are still buying gold.
Yeah,
that's historically been true. Yeah, but that's also, Howard, you've been around for a long time as well in the market. That's always been the case, though, when there's uncertainty. No, I mean in trading. He's been trading for like 30 years.
I've been around the block a few times.
Yeah,
it's
yeah.
Sorry. Yeah, no, it's still solid. It's still solid up there. I mean, maybe it looks like one of those little triangle things, which is the kind of the final consolidation before a turn. Like a minor fourth wave. It could be one of those things where you see a bit of a push through the highs and 3170, 3180, and then they come in to take some profits.
We got some ascending triangle action for sure.
Looks like it looks like a little bit one of those typical sort of consolidative to kind of can't even say it right. Consolidative.
Consolidatory.
Move.
Is that it?
That's the one.
Yeah.
That's the one.
I
That's,
nailed it.
But it is difficult to, because there's no resistance in the way, nothing. Like
Yeah.
you don't have like a target, or there's just like open skies.
Yeah.
So
No, you
it's just
don't
gonna
want
be-
to short
it's gonna
it
be-
until you. Yeah, you can't short it until you see
No.
something really solid on the charts. Really.
Yeah, you need to wait for, even when you get a break of structure, you still have to, just stand back and wait for something solid to line up.
Yeah.
Yeah. All right.
I feel we should rename these podcasts just for the next couple of weeks as Traders React to the Trade War. You're right. 'Cause
Yeah, you're right. Not a bad idea. But I think, guys, that are we out of time? Yes, we are.
Yeah.
I would have loved to stay for another 2 hours. Unfortunately, we're gonna have to go now. Always nice to see you, Paul. Howard, nice to see you again.
Pleasure to see you
great to
again.
see you, Howard. Glad we have proof of life.
Yep. See
Yeah.
we're live.
Uh,
See everybody soon, and stay
Have a
safe
good-
tonight if you're trading.
Yeah.
Take
Thanks,
care.
Howard.
Definitely.
Good advice.
Cheers,
Take care,
guys.
everyone.
Cheers. Bye-bye.
Hello, Michael, Aymane. How are you guys doing
Hello.
today?
Hey, what's up, Sam? What's up, Amy?
What's up, Michael? Good. And you, Sam? How was your trading day?
Oh man,
Not bad, not bad. I didn't expect the bullish momentum we had today at market open, and I was trying to catch some kind of pullback so I can enter. Never happened, and then eventually I managed to get a little short position, and the entry and exit was. Oh, if I got it a little bit wrong, that would have been a bad trade. So I got it just right.
yeah,
Very lucky.
Same. I took actually
man.
like
I took some heat today. I had to close the position on that EU position I was mentioning to you guys on the 4-hour chart on Monday.
Yeah.
I took some heat on this. I lost 0.3 on this trade today. Let me show it.
Okay.
It happens. It happens.
Like for me, I took like 3 positions. I think we did the same. I have the recording. Like I tried to enter short just to take some points, but
Yeah.
it
On
took
EU?
me out. No, in NQ. No, in NQ.
Oh, okay. I'm gonna say, man, you like the 4th person. I seen a lot of people got smoked today on
Yeah, but
EU.
but like today, not everyone, but most trader maybe they were expecting like bearish momentum due to tariff. So
Yeah.
we could see a good move to the
Yep.
downside later. But yeah, most of people were
This thing
liquidated, and
smoked
also
me.
like
Not
on the delta.
smoked me.
Okay.
Can you guys see my charts?
Yeah, we can
Yep.
see it, Michael. Go ahead.
Yeah, okay. Yeah, so I'm sure you remember, right? On Monday, was that Monday? Yeah, on Monday we were talking about this because I didn't see you on Tuesday. So on Monday.
That's right.
Yep. And I said, when this happens, I'm gonna be all over this trade. Like all over it. And sure enough, it set up, and this thing did not go the way I thought it was gonna go.
It happens,
Right?
man. It happens.
Yeah.
Yep. And I want to show something that's cool, right? This is the importance of having an exit strategy. Like, so I want to point this out here. Now, this is still in play. As you see, I got another entry. This is technically still in play because it hasn't converted into a bullish momentum yet. Like, this could still turn around, flip back, and I'll be right back on it for the same move, right? But just to kind of point it out, as you guys know, I stay away from these peaks. Right, so this M top, I'm not interested in at all. Right, peak high, I'm staying away from that, and then the peak low, I'm staying away from this too. Right, I'm only interested in, as I always say, the move here. Whoops, looks a little funky. Yeah, move here. I'll just put a little arrow on there because this is level 1, right? Level 1. And then this second move here also, which would be level 2, right? Only these 2 moves I'm interested in. So coming right out the box, I can tell that I'm in level 2. All right, so once I got this M structure over here, right, on the actual chart, beautiful M structure, right? It runs down. Now on the chart, we got our 1350 cross, so this automatically signifies that I'm in level 1 here, right? Which is the same thing as over there, right? Level 1, and it missed this 200. It missed the 200 EMA, which is good. I don't want it to touch it. I want to pull back and actually just go short. So we got this move here. My move was expecting it to go short this way. So as soon as this candle closed, I waited for a pullback. I was actually in at a great position, guys, at 0802, right here, right? So I got a nice position. My stops was above here. This thing literally did not move. The lowest, as you see, it got here. Right now, for me, once this actually closes, so once the price, once the candle closes below the 13, this is my entry candle, right here. So it pulled back. I waited for this price. It came back to 02, right? So about right here is where I got short. I'll make this red. I got short right here. And so let's just do it here, right? And my stop was right above here at 36. Yes, 8/36. So somewhere right here. And then my TP, of course, was the 200 EMA. That's where I was picturing this to go. It was at 16. Yeah, so 0.716. Pip lower than
That would have
this.
been a nice
around
risk
here.
reward as well.
Man, this damn thing. Right?
You know what? It
So the
caught
funny
everyone by surprise today.
Man, this thing came out of this momentum. And when I tell you I'm watching this at the last minute, this candle, right? This literally this candle here, I'll make another thing. This candle here, this thing literally at the very last minute was already here. I'm like, man, that's all right. Well, it's still sitting there, whatever. I'm somehow in the last 10 minutes, this thing just the most momentum ever came into this candle. And
those type of candles.
Yeah,
those type of candles that they took the previous week, like it happened so quick. So I think.
So for me, right, once this closes below the 13, so that's this red entry candle, right? That's my entry candle, and it hovered around, which is all this is fine. But my exit, as I always say, is once on shorts, is when price closes back above the 13, which is this candle. The candle closed all the way up here, which is of course above this red 13 EMA. I gotta close it. You gotta close it at that point because it can do whatever it wants to do from there. And this is the importance. What I really want to point out is sticking to the strategy. I lost 0.3% on this trade, and I could have lost my full 1%. I clearly would have got stopped out with this next candle, right? This next candle was bigger than the last one, right? So yeah, it sucks that you have to, sometimes you got to just close your position, and a part of you wants to give it another chance, but data tells me once this closes back the other way on the 13, you want to be out of this. So just close it automatically. I took this in front of everybody yesterday. And I was like, this is my A1 setup. If this doesn't go, I'll be totally surprised, which I didn't expect it to not stop me out, but I didn't expect it to have that such momentum, like fierce momentum in the last 5 minutes, guys. Like this today was crazy in the last 5 minutes.
Bro, I'm telling you, today the even on the S&P, man, the bulls were vicious. Like very similar to when we saw that mad drop. We had a kind of similar bull run today, and that caught me off guard as well. Like I kept expecting, like, okay, at some point near the highs we're going to see a reversal, and well, I shorted it. There was a little pullback. I managed to make a bit of money, but man, like if I held to my take profit,
came out of nowhere.
I would have been stopped out.
Yeah, today was tricky a little bit.
And again, I just want to really stress the importance of this, right? Because, like, again, once this candle closed above the 13 right here, I closed the trade. I was down 0.3% on the account, closed the trade automatically. And I always, this is a learning lesson in itself, right? This reinforces your trading plan, which is, for me, is always, one, stick to it, your trading plan, but two, Mike, always remember, once this candle closes, you're wrong here, basically. Like right at this point, you're wrong. So take the first wrong opportunity, right? Because had I said to myself, nah, this trade is still short, everything still looks good, I'm gonna just hold it, I would have got stopped out. I would have lost my full 1%. So I end up only losing 0.3 on this versus a full 1% in a stop out. Because this next one, as you see, would have definitely stopped me out. It came all the way up here. Right, I would have lost 3 times as much by not sticking to my trading plan, guys. That's the importance right there that I wanted to show, right? Because it's obviously sometimes it's about showing how everything worked out perfectly, but even in the times when it doesn't, this still reinforces the trading plan. Take your medicine. You know, you wasn't expecting, you was wrong. That's totally fine. That's trading, but don't be dumb. Don't get emotional and hold on to it because you think it's still going, right? I would have totally broke my trading plan. I would have totally got stopped out. So even though this didn't go the way I anticipated it, me losing 0.3, you know, I'm down on the day, but guess what? I'm up on my process. And that's what's most important, right? Like I followed my plan to the T, and I'm happy about this. So, but yeah, this told me up. I was not expecting this at all. And like I said, I still got these alerts on here. So this is where I would have moved my stop loss to break even, as you can see. So I'm gonna take this off, right? And then of course this was my TP zone. So I'm gonna take these off because they're important at this moment. But I'm gonna still leave this on just in case this does turn around and just flip back down.
Yeah.
And it'll still be in play for the most part. So yeah, EU was madness.
Yeah. For me, like the market today tested my patience, so I was waiting for really, really good setup on NASDAQ. If I can share the screen.
Absolutely. While you do that, hello, Robert. He's back.
Hey,
Robert
what's
is
up,
back.
Robert?
Robert says, yeah, I end negative on 2 accounts that I copy trade. Went from negative to a hair profit, back to negative, stop trading. That's a good decision there. Yeah, man. Well, if it's not working out, stop trading. Come back the next day. So very, very good. Excellent discipline.
For sure.
So like as I said yesterday, we were sitting in this important area of interest for buyers. And
Wait
then,
a second, what is this? Oh, this is the 1 week. Okay, I was looking, I was like,
the 1 week, yeah.
I was like, when did it drop like that?
Yeah, the weekly, sorry, the weekly.
Yeah, no, that's fine.
So, like, when you see the daily, like we had this big red candle at the end of this small trend, and we took the previous week, as you can see, closed bullish. So I was bullish yesterday and bullish today, and my A+ setup, it was actually at the open, at the NY open, but I have like fixed rule that I have to wait at least 3 minutes, 5 minutes. So this week right here, I don't know if you can see it, this week here, it was from yesterday. So like the same thing, like took previous weeks, close bullish, there was continuation. So for me, like there will be some buy limits sitting here waiting for it to get filled. So when you drop to the 15 minutes, like normally I was waiting here to get a buy, sorry, in the 5 minutes also. So we had this big push to the upside. I was waiting a little bit for it to retrace, but it went without me. It was tough because I was watching it like emotional damage. So
we know all about that.
And I had, let me see, I had this zone right here. I was trying to take small shorts from this area right here, and I had one supply right here. So let me show the recording.
Bro, your charts are so clean. I need to copy exactly how you do it. They're so nice. Like the blue, the boxes look lovely. Like, it's like art. My charts look disgusting. Like you look at them and it hurts your brain.
That's like what Jannie says, me and you have too much jewelry on our chart, right, Sam?
Exactly.
So, yeah, so actually I recorded, let's start from here, I think. Yeah, so we were sitting in this supply. I wanted to jump here, but I was, and this is the thing, like, it's not about like always which trade you took, but it's always like how, like the amount of patience you should have to wait for the right setup. So maybe like now we are showing just the setups, but behind it, like there is a lot of waiting, like 1 hour, 1 hour and a half. There was a lot of temptation to enter before, and you try to control, no, wait. So yeah. So I had this setup here, yes. On the 3 minute, I got the confirmation. So the bear were looking good. We had clusters like this -7.2 were respected. We had this small let's say absorption, sellers step in. Today I switched to micros, so because it was volatile, I checked the ATR, and it was like 30 points in 1 minute candle. So
Yeah.
Wow.
yeah, so I said,
Crazy.
okay, it's time to switch. So
Mhm.
yeah, I saw here, like, let's get back a little bit. Okay, so yes, I moved my stop a little lower because I saw like there was a big cluster here and we are pushing here. So I move it lower because if we didn't respect this cluster that I was basing my trade on it, like maybe it's sellers were getting absorbed, and yeah, so I got stopped out in this trade. Later I re-enter on, let's see somewhere here. Yes, let's get back a little bit. Yeah, so again, I saw on the footprint like there was aggressive sellers entering here, but the only issue it just we had big cluster in the low of the candle, and I was waiting for quick continuation just to take this low, and yeah, this minus 98, and this is what happened. And then I moved my stop a little lower because like the overall trend was here like clearly bullish. So
Yeah.
and then I got, yeah, let me pass forward it a little bit. Yes, here, like I saw the rejection, I saw big cluster entering here in the low of this candle, 5 minutes candle. Let me see if I show it. Yeah, there was big cluster here, and it took me at break even. So that was it for this account, and then like I took a small break and I traded another account. Let me see. Yes, here. So here, like I took this trade. It was like we were bullish, so, and we were pushing like this. My typical setup, like you see this 15. This is 15 minutes. Like it took this previous week. I saw that there is a little bit of aggressivity, not that much. Here we close. So I was waiting here to get confirmation of the footprint, just basically absorption and buyer step in. So I enter here. Stop loss was a little bit big this time. I got my confirmation candle. Footprint confirmed the same thing. Like we had 109 here on the 5 minutes delta
Wow.
candle. And basically when I saw it at the top, like always, I was expecting like continuation. Otherwise, there will be maybe a sort of absorption. So yeah, here like I went out really early because like if you see the price now, it just tests the zone here and continue. I think I got out at 500 something. So it was a little bit.
Yeah, no, I mean, especially with today, you had to be a bit more cautious, I think.
For sure. Very smart of you to even know to decrease your leverage, right? And to go to minis. Anyone else wouldn't have even done that.
Yeah. Like
Right.
actually for me, this is like the first thing I check is basically the ATR. So I have to always before start trading, like checking the ATR, see how it look like. Because like it happened to me before. I don't check the ATR, and normally like I have my stop loss, let's say below of the structure, but because I'm entering one mini, like if I put it below the structure, it's like $2,000 or something, like it's too much.
Right.
So I have to like base my trade on what I see, not like on the dollar amount. So
For sure. For sure. And
Ah,
once again, we're right back to, I'm gonna say the words. This is what separates pros from amateurs, right? Seriously,
absolutely.
seriously. Once again,
Ah, awesome job, honestly.
even
I did something.
on tough days like today, right? We're just showing that extra level of experience, no matter what.
Yeah. Absolutely, absolutely. I mean,
And
go on,
and
Aymane, go on.
yeah, and normally, just to add on, normally, like when I start my session and I already missed a good trade, most of the time I just walk away, because I know, like, it happened to me before so many times that you missed an opportunity and you say, okay, I am in control of myself. Okay, I will not overtrade, or I will not take any bad trades. But yeah, just this thing, like just today, it happened that I stay and I trade. But like most of the time, when I miss a trade, I said, okay, maybe today is not the day, and I walk away.
Yeah, no, absolutely. I mean, it was similar with me today. Couldn't get a trade. Let me share my screen. I'll show you. And then so yesterday, I think, Aymane, we spoke about the depth of market. I said sometimes I use the depth of market.
Yes.
Today, the depth of market is really helped me out, and I'll explain. So my trade was literally from here to here. This little short position, I caught it about here, and I got out around there somewhere. That was my trade, right? Obviously, the stop wasn't that high. But, just about caught it. But there was never any pullbacks. And when we actually opened, when the market opened, US Open, we were at this level of support. But I just had it in my head. Now, this shows that sometimes when you have like a bias and it's too strong, it can make you miss opportunities, right? I had it in my head. Nah, we're going to go down. We're going to go down. This market's going to crash, blah, blah, blah. I convinced myself that we are going down. So when it opened, I wasn't even looking for buy positions, despite being at a support level that I had drawn out, right? Which would normally put me more in the buyer's favor. Yeah. Right. But we opened up. If I go to the footprint and actually go back all the way down to the open, like I can see it in hindsight now. Yeah, damn, actually, it was obviously a buy. But I was too afraid to pull the trigger on a buy, because I was like, nah, we're at this support level. It's going to be a trick. It's going to be a trick. And you could just see the volume come in immediately at open, bang, and it's going their way. It didn't struggle. It just kept going. Now, of course, at this point, I'm still thinking in my head, okay, they're going to trap traders. They're going to trap buyers. They're going to push it up. At some point, sellers are going to come in. Some point around like one of the resistance areas, we're going to see sellers. And it just didn't happen. Like, we got to this resistance area and I'm just not seeing the sellers come in, right? I'm like, these buyers are still coming in strong. And like, if I mark it out, like these buyers here, they're still coming in strong. There is a bit of pushback, but there's nothing even on the depth of market to indicate that people are getting out here, right? And I'm like, damn. Okay, so now I'm switching my bias finally, and I'm thinking, okay, now I want to potentially be buying this market, but I don't want to buy it here. I want to see it come back down for a retracement, right? Push back down to this area, and then I can jump in for a buy, and it will be beautiful. But it just never retraced enough. Just barely retraced. Kind of went sideways for a bit. Kept going up, blew through that area, kept going up. And then finally, we got to this the most extreme level of resistance, right, that I had marked out. Okay. And I knew that there has to be a bit of a reaction here. So maybe my thinking was, we're probably going to get a pullback here to this area and then a comeback again. So I'm going to try short it, be very cautious, get out the moment I see anything I don't like. And then when we get back to that area, I can buy it up again. So I'll get two trades out of one move.
Right.
And as you can see, it didn't pull back enough. So if I pull up the actual, because with this, the depth of market gave me, now I entered quite aggressively and quite quickly, and it was due to the depth of market. So if I show the video, bear with me, I'm going to have to stop the screen and share the entire screen. Where are we? Here we are.
It's all about like to minimize the damage when you are having bad day, or like when the market is not that good. it's always good like to minimize it.
That's it. So what we're going to look at is this candle here forming. All right, this is where I start the video. All right, so it's the 5 minute. I'm still seeing buyers come in, but look at the depth of market really quick. I tried pointing it out, but if you look at the depth of market, look at the amount of contracts sitting in this area, right? So you know these are all people getting out the market, right? Taking profit. This is the level that's going to slow down these bulls for a bit, right? We're seeing it on the depth of market. Finally, we didn't see that before, right? So finally, I'm like, okay, now I'm quite confident to enter quite aggressively because there's a good chance when we poke up into this area, there's going to be quite an aggressive reaction sometimes, right? It pokes up and then we get this kind of quick move down. Now, we didn't really get that, but I'm just going to forward it a bit because it took a few minutes for it to actually get to that area. And, I drew a line. Why did I draw a line? I think I saw something on the depth of market.
You guys do a good job of recording the trades.
Yeah,
absolutely.
Like, that's something, and this is, you know, you always learn as a trader. This is something I guess y'all do so good that I need to tighten up on. Y'all do a great job of recording this.
Honestly, it's actually quite. I wouldn't say it's fun, but I don't know. When you know that like what you're about to do is going to be watched by people.
Yeah.
You're even more disciplined in a weird way. Do you know what I mean?
No, I feel you.
Also the recording help you in journaling, so it make it easier for you if you journal. So
that's right, exactly that as well. But what I want to point out here is on the depth of market on 5695, we got 550 contracts right there. Now that's a huge number. Like just look at the numbers compared to the buy side. You got like average numbers 70, 60, whatever. Here we got everything is like over 100 at a certain point, right? And then you got 500, so they're all stacked up here. So what I do is I mark out 5695, and that is where I expect quite a reaction to occur, right? So I mark it out, I put the line there, and that's kind of where I want to be looking to buy. And the moment the market goes in, boom, 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 buyers just take it all out, right? But now when this usually happens, now this is something you need, I guess, experience here. When something like this usually happens, when the market kind of not gaps through it, but actually executes, right? There's always going to be like a little pullback in order to get more liquidity in order for it to keep going. It's hard to explain, but so the moment I saw that, I was quite happy to pretty much start entering. I'm going to just kind of figure out where shall I put my stops though. So I entered one position. The moment I'm seeing a bit of absorption happen, I pile on a few positions a few minutes later. I'm just kind of looking now, like where is it really going to just slow down? But what's important to look at, right? These are buyers, okay, taking that liquidity, right, from these sell limits. But we had 1, 2, 3, almost 4,000 contracts in one area, right? But what did the market actually do right after? It's been over a minute and it still hasn't pushed up higher. You would expect 4,000 contracts would have quite a reaction to the market, right? You would expect quite an impulsive move up, but we're not seeing that. So I'm just kind of, at this moment, I'm literally just looking at the sell contracts and the buy contracts. And every time I see these numbers go up, as in like more in the buy favor, I want to see how the candle reacts. Is it actually able to move up much? If it goes in the sell favor, how is it able to move down easier? Does that make sense? Like who is more efficient at pushing the market? And you'll see that essentially every time the number goes more in the favor of the sellers, I don't know what I'm doing here. I'm just double checking the area's legit. But every time it goes, I start getting a little bit nervous, got my hand on the exit just in case I was wrong. But every time sellers came in, they were able to push the market down a lot easier. There just wasn't enough sellers, right, at this moment in time. But the buyers were piling it on and they were struggling to get it to really, you know, they had to put in a lot of contracts in order to get that up, right? So I was kind of my stop would have been like above this black line. That would be my absolute get out. So I was kind of just waiting a bit, set my stop loss. And I'm looking for like who is more efficient. It's getting very close. I was getting very nervous here. I was like, oh man, come on, don't do this to me. I was like, it has to push down a little bit. I've seen this play out so many times, like it has to. I'm just waiting for that aggression to come in from the sellers. I'm like looking at different time frames because I jumped in a little bit prematurely, right? I jumped the gun a little bit because I was expecting more of an impulsive move, but the buyers still had a little bit more oomph to give. And then I started seeing finally the sellers are now coming in with a bit of aggression. So I add the orders on. I put my full position in now. I got my stops really tight. So this is like very tight, these stops. Set my take profit. And if I just forward it, because it does play out for a few minutes, it just kind of goes sideways while there's a bit of a battle. I'll just forward it a bit more. Nothing's happening. Still very boring. I'm just waiting for those sellers to come in. It's taken quite a few minutes for it to do it. But eventually, we start pushing down. And now, as it starts going in my favor, I'm looking at the exact same thing, but on the opposite side, right? I'm looking now like where at which point, because the sellers are coming in quite strong and they're doing quite well. They're able to push the market down quite not too easily, but they're doing better than the buyers right now. But the moment I see heavy sell contracts come in and the market just refuses to move, that's my get out, right? Because the same thing is happening. Like the sellers are exhausted, right? They're just not able to push the market down, even with a lot of contracts. And that's where realistically, you're going to see the market go up. And I think we see that happen anywhere here, somewhere around here. Like, here it is, like over 1,000 contracts, but we're just look at the candle. Like, it's just not going, just not moving. They're adding and adding orders, but it's just not breaking. Do you know what I mean? It's refusing to move.
So I got a question for you. For both of you guys. In a situation like that, right? Because I look at footprints, but not too often. Like maybe I'll look at it when it's like, funny enough, I actually upgraded my TradingView subscription just to look at it, and I don't even use it that much. So I feel like they're getting the best of that scenario. But when I'm looking at it in this scenario, are you guys waiting for, like, let's say, for example, it's short now. Do you think that there's a bunch of pending buy orders right here, and that's why it's not pushing through? So in this part, not necessarily, because like the depth of market, which shows the pending buy orders, there's nothing really scary here, right? So what's happening here is that there's buyers, active market orders, active buyers actually buying into that sell pressure. Do you know what I mean? They're actually hitting that buy button. They're not adding pending orders. They're literally hitting buy, and they're defending an area basically. Gotcha. So there's obviously some institutions, something that don't mind the market coming down because they actually want to take the opposite side to all these sellers, right? In order to pile on bigger orders, and they break up like a really big order into loads of smaller ones, and they basically take the opposite side of all these orders, and then eventually, they got enough to meet their whole big order. It's called an iceberg order, and then the market can finally just shoot up. So yeah, like when you see pending orders, it's most likely those are people, taking profit, stuff like that. Like wherever you would put, logically where you would put like your take profit or something like that, or stops or whatever. Those would be like on pending orders. Okay. So in this scenario, how you see it's 1,000 short orders coming in, but it's not moving. That to you signifies that there's buyers actively buying this price and defending this price right here. Yeah, they're defending it. Doesn't necessarily mean they'll actually be successful. Of course. But considering how bullish we were, like sometimes I would hold that and be like, okay, let's see, because like if I feel the sellers are quite strong and we're generally on a down day, then I would say,
most buyers would give up at some point and be like, it's not going to happen. They're just going to stop buying into it. But when we had such a harsh push up, like in context, there's someone out there with a hell of a lot more money than me who can who can get this market going up. So I don't want to battle against them.
Right. I know that's
so
right.
essentially, that's where I decide it's time to get out. And luckily, it was literally around that point it then started pushing up. So again, like using caution, that was literally this wick here, and then it just flooded up, as you could see. Once they met their whole iceberg order, easy went up. But yeah, again, like you had to be cautious because I was selling into such a strong bull market. But there was no opportunity to buy. Like I wouldn't have been comfortable enough just to buy on that alone. I wanted it. Like I only really enter whenever there's a gap in volume, right? So I have to wait for price to get to one of these areas before I even consider buying, right, or selling. Like here's a gap in volume. Now price is about to retrace back into it. If now the footprint also lines up with it, then I might potentially, look for a buy, like, and then back to like one of these highs or something, or to, wherever makes sense on structurally wise. And then I would have like my stops, absolute stops down here. Like, I mean, in fact, we might see something play out. I'm not actually going to take it because this is out of my time zone, but I count myself lucky today. But so we got some sell pressure coming in, and then basically I'll be looking for a similar thing. Like, are these sellers starting to now do any damage, right? Are there like hidden buyers buying into this sell pressure? So you just kind of look at it, like you look at the numbers. So you drop to 66, drop to 57. That's buyers coming in. It's going back up 69. And you're just kind of seeing what's actually happening to the candle in that moment, right? And you just kind of got to like really focus. And you can see the numbers are going down. So there's definitely buyers coming in here.
Right.
They're not pushing it up that much, but they're starting to like slowly push up. So there could be a bit of a push up, and you could enter. There we go. You just saw it jump green. So there you can enter one position now. And then you just wait for, more buyers to come in to hopefully push it up even more.
Like,
does that make sense?
As Sam said, like you have to build context. Like just one thing, seeing just one big cluster, you cannot base your trade just on one thing. Like you have, for example, you have to be in a zone. Like Michael, you asked, I think, about pending orders. Just the way I interpreted it, it's just like, okay, there is aggressive like buyers at certain price. So for me, like for them to be in profit because they push the market, they bought markets. I think about it like they bought markets, so they push the market up. So for me, on those zones when the market will come back, if I see like absorption and like buyers step in, so for me, like the buy limits, let's say, were activated and we had absorption, and you see the buyers step in. And I like always like
right now, right? This thing went from 400 right in front of us to
But what's worrying is that they're not doing much damage. They've got over 1,000 now on the buy side, and they're struggling to break through here, right? So you would have to give it a few more minutes. Sometimes it could take a time to play out, because it just depends when these sellers actually get out the market, right? The moment they start realizing, I don't think it's going to drop much more, and they start pulling out the market, it releases a lot of pressure, essentially. And then it just takes a little bit more buy aggression and the markets start going up again. But the buyers are very aggressive today. So I wouldn't be surprised if we actually do, if sellers are going to be more cautious, like what I was. The moment you see, 1,000 contracts on the buy side, you're probably maybe time to get out of the market. Do you know what I mean? So, but yeah. So you're kind of just, sometimes you can see it on the 1 minute better. This is the thing with the footprint though. Like there was definitely a lot of buying happening right there. sometimes you can see it clearer on different time frames. And you got to like build a story. Like I like to build a story. So I like to start from the beginning of market open and then kind of tally up like the cumulative delta, right? So from market open, I look at kind of how many fresh buyers entered the market, like roughly, right? Like we have got 16,000 delta, but I'm only looking for the big players because all the small contracts, like they don't matter, right? They get absorbed so quickly. So I'm only looking for the big players, like anything close to 1,000. I mark that down in my head as like, okay, that's someone big. So 1,000, almost 1,000, so 2, about 3 there, 4, 5, 6, 7, 8, 9, say about 10,000 there, 11,000. And then you're also looking at where they could potentially be getting out, where it makes sense. And maybe some got out here. So they go back to about 10,000, back to 11,000. I'm just kind of counting it up back to 10, 11, 12, around 10,000, maybe 11,000. Here we had loads again come in. 1, 2, 3, 4, 5, another say 15,000. I'm just doing a rough count. 14,000, 14, 13, say another 12, 13 that cancel each other out. That's about, say altogether there's about 10,000. So until I see like at least maybe 5,000 contracts on the sell side, at least half of it, like near an area where you would expect buyers, buyers getting out, then you can kind of figure out, okay, there's a lot of buy pressure's been released. So if the tally's around 10, we had about 9, 8, 7, 6, 5. So yeah, there's probably still about 5 or so thousand buy contracts in the market. So a lot of them have left. A lot of these buyers have left the market already, I would say, roughly, right? A lot of them got out on that candle there because that had a lot of volume. So now knowing that a lot of buyers are out the market, there's going to be less pressure, buy pressure in the market right now to keep sellers, if sellers become aggressive, to keep them from pushing them. Sorry, did I get that right? Yeah, if sellers become aggressive, there's less buyers now, less buy pressure to keep the market from, going up. So you can kind of like build a picture, kind of like a quick story.
Yeah.
You know?
I like that. I like that ideology.
And just
So you
like
saw,
a question for Sam, like the way you trade, it's a little bit like mine, but you focus also just absorption and reversal. You don't have like the continuation, like trades where you take continuation. Yeah.
Oh no, absolutely. Like when we're in a strong trend, I'm always looking for continuation trades as well. Like as long as it goes back to an area where I'm happy to buy into, right? Like I would have absolutely bought the market if it came back down to here. Like if it dropped back down, I would have 100% bought the market back up, right? As long as I saw buy pressure come in and all that, right? Because this was like, there were so many buyers still in the market at this point, right? They haven't left the market. They started leaving at the top here. We saw loads of sell contracts in one area. A lot of them left there. A lot of them did leave around here as well, to be fair, when we saw in the depth of market. Sadly, I couldn't see the depth of market right here exactly on that candle because the depth of market is live. So there's no way of like replaying it or anything. If you miss it, you miss it. Like there's no way of looking back in time. But yeah, like
if it's possible to check the delta, if it's how it look like on the, is it negative? Because like my delta, it's like it was choppy because we are trending higher and there was a lot of a lot of like
The
negative delta. Yeah.
the delta, what, of each individual candle, or
Yes. Yes. Yeah.
which time frame?
Like 15 minutes.
15 minutes, yeah. So once it loads, so on the last 15-minute candle, there was 992 negative delta. But look, yeah, there was like 6,000 on this candle here. So that's a lot of people getting out the market, you know? And like generally speaking, we haven't seen 6,000. We saw a lot of people get out here at 3,000. That's where I entered, right? Huge amount of buying here, 11,000. And you can see that these numbers are all pretty big, right? Like this is where all the momentum was, where all the buyers were hanging around, and then here 16,000 on the open. So 6,000 on the sell side is actually the biggest we've seen all day for the sellers. So that's buyers just getting the hell out the market, taking their money, profit, happy days. And now a lot of them are out the market, and therefore we're going to see that drift down for a bit, and it could go, I mean, it could drop quite a bit, but until the bulls start buying into it again, but I doubt.
I'm sorry, I
because of the time.
will just close the door. Come back.
Oh, you didn't hear what I said? Aben? Oh, he's closing the door now.
Oh, sorry, just 1 minute. I have to.
Okay, no
eat
problem. No problem.
something
Take your
if
time.
it's- yeah.
Yeah, I wonder on the 1 minute or smaller time frame if we get to see like a huge amount of buyers exiting the market on that candle.
Exiting. Okay. Yeah, I check this out sometime, like to hold the trades, but I don't really have a process to like how you build a story. I think that's a good way of doing it, right? Is to add that story to my already existing story.
Yeah, no, absolutely. I mean, it's sometimes hard. Like you have to kind of have a story because all it's showing you is buy and sell contracts, but those buy contracts could be sellers exiting. They could be fresh new buyers. Like it's hard. So you have to build it within context. What makes sense? Like
for sure.
You kind of know that if you're near a high and you see a bunch of sell contracts coming in, that's buyers taking profit. Like it's just logical to assume that, right? But yeah, you could definitely see like on the 1 minute, the clusters themselves, like each price level's just got people dumping orders, right? 700, 800. They're just dumping their buy orders as they're getting out the market.
Do you only look at the S&P or do you look at NAS and the other one too?
Yeah, just S&P. I mean, NAS 100 is like identical almost. You know what I mean?
Yeah.
So like if I'm taking a trade on the S&P and I'm wrong and I take it on the NAS, I'm also wrong. Do you know what I mean? Yeah. I might as well just enter double then.
Same thing for me. Like when I go through my check downs, like on my watch list, if you notice, the very first one is NAS 100, then US 30, then S&P. They're all together because they kind of move the same. I'm looking for the cleanest of the three if I'm taking one. I'm not taking both of them.
Yeah.
They already like some little Maserati, Lamborghini, fast-moving vehicles, right? Like you got to be careful with those. So I definitely get you.
Yeah, absolutely. No, you're absolutely right. But yeah, it looks like the buyers are finally out the market. And then now, like for the next day, I'll try and figure out what could potentially happen the next day. Like, so I know why it stopped there. There's a gap in volume there, which I never actually drew out. Annoyingly, I actually completely missed that. There you go. So now that there's a gap in volume, that kind of makes sense. That's the most extreme gap in volume. I thought that was it. Bloody hell, I made I'm even more lucky now.
Yeah.
Because normally
Yeah.
I would only trade the most extreme one, right? The ones highest or lowest. They're the ones that usually have the most reaction power to it. And I traded that one, which I thought was the most extreme, but I just realized here there is a gap. So that's the most extreme one. So again, I still don't have like a long-term bias with the S&P. I truly, I don't think we're necessarily going to be. It really depends.
Yeah.
Like,
Today was the first day of the supposed new tariffs kicking in and all of this stuff. So we got NFP on Friday. We kind of got to see what's
It's
really
packed
happening.
week.
Yeah.
There's a lot of movements.
Yeah, I never really liked NFP week. I can't lie. Like it's always like, even for me, right? Because you always feel you have extra reasons to blame it for stuff, right? So I can easily say, oh, my euro trade didn't work out today because today's the first day of the tariffs thing. Today's the non-farms on Friday, right? You can almost easily like blame it on that. But at the same time, you still got to be honest with yourself and say you were wrong on that one. That one didn't go the way you thought it was going to go. But there is some context there, right? Like maybe not. We'll see. Now, if Friday comes along, right, and this thing plummets to the 200 EMA, that is going to give me my C. Like they were just being sneaky. They held it because they do that. That's why I never really liked NFP week. I don't trade Fridays NFP at all. Like I haven't in like 2.5 years. I'll watch it, of course, because I still like to see the action, but I don't actively trade it. That's actually always been my worst day in the past like 2.5, 3 years, which is why I don't trade that day specifically. But even the week is always a bit tough, right? Like I'm ready to get the beginning of Q2 behind us, right? Start of Q1, this tariffs thing, NFP week. I think we got some other news. I want to get this week behind us. Yeah, and just go on for next week.
I think like when you have an edge and you have a system, you stay away from news in general, because you don't want like your edge to get like you get just something unexpected from a news. It will break a little bit your edge and your momentum. So normally
I correlate that to no matter how good of a driver you are, right? Like not me. I'm like not the best driver ever. I'll be totally honest about that. I get driven. I don't drive anywhere. But I'm speaking of someone who can drive really well. You can't tell me that you can drive your car the same way when it's pouring down raining, right? You can't possibly drive your car the same way, right? So no matter how much edge you have, you're a great driver. You can probably get on the runway and just tear it up or something. You cannot do that same thing when it's pouring down raining. You just can't, right?
Right.
This is pouring down raining, dark, right? You can't drive your car the same way. I'm sure you don't. It just doesn't perform the same, right? So I look at it the same way in essence. Like there's some variables there that's going to affect the outcome, and I don't like that part.
Yeah.
Yeah.
No, totally agree. I just wanted to point out really quick.
Yeah.
Oh,
okay.
one moment. Let me just point something out. So, when we had this bull run up today, there's obviously two obvious areas where people would take profit, right? You got this high here, right? And then you got this obvious high here, right? And this high is basically where I shorted the market and it dropped down a little bit. And we saw on the depth of market that 500 contracts, and then here's where we saw those massive amounts of sell orders come in, which are obviously buyers exiting. So like if you align it with general obvious structure, like even just the depth of market, if you see like, a huge amount of contracts coming in near a high, and then they actually get executed as sell orders, like, oh, that's beautiful. Like, there's got a good chance that's got a bit of a reversal coming in. Right. So that's pretty much the only way I use the depth of market. I don't use it otherwise, like to base any other decision really, because most of the time it doesn't actually tell you that much. it's just nice to know where other people are taking profit and stuff like that.
Right.
But yeah, that's it for me. I will hand it over to you, Aymane. There we go.
Nice. Well, you came out on top today. That's awesome.
Just about. That could have been bad.
Yeah.
That was risky. To be fair, like when I entered and then I saw it like getting close to my stop, I was like, nah, I've messed this up. This was bad. I shouldn't have been that eager to jump in based on one confluence. Like I should have been a bit more. But it's like what Aymane said. Like I was waiting hours for a trade, and it just I was starting to get a bit like frustrated. Like it wouldn't pull back to allow me in. So actually, I would say I got more lucky than actually my discipline wasn't as good.
Yeah.
Yeah.
No, I hear you. I will say that's kind of the same thing with like the GU trade, right? Because we talked about it on Monday. I didn't take it until Tuesday, right? I took it at Tuesday's close, right? Because normally I don't take trades in a 4-hour chart unless you're pristine Mona Lisa setup like that one was. But when my number 3 on my list, as always, is the higher time frame confirmation. So instead of even on a 1-hour chart and kicking it up to the 4-hour chart for my confirmation, I was on the 4-hour chart, so I had to kick it up to the daily for my confirmation. So I needed yesterday's close below the 13 to occur. So that was a lot of waiting. That was almost an extra day.
Wow. Yeah. Crazy.
Right.
Robert's got to leave. All right, Robert, take care. You've probably already left by now. But thanks for joining.
As always.
So, like, just like how many? 15 minutes ago, 30 minutes, we saw really good rejection from this area right here. It's the same. Like I was expecting like the some sell limits here, so maybe we could push the price back to this area here where like the 19,500, or if the buyers stay like strong, we could see like this week get taken and then break this area. But if we check the delta, how it looks like, it's quite interesting. Entire, yes, here. So when I asked you Sam before, like about the delta, like what I meant, let me see the open. Like, yeah, I meant here, like you see, it's not that clear. Like you see that the delta, we are trending higher and stronger, but the delta is switching like 400 plus minus 200 plus 500 minus. So it was a little bit like, maybe you analyze it like the sellers will get stopped out. I think this is the way you see it. I think when you see
when you see buy orders, or
no, when you see sell orders, like in like something like here, like sell cluster.
I would see that as just either buyers getting out, or sellers trying to get in. Yeah. And just not happening for them. Yeah.
Okay. So like now we saw that if we check the volume, like here, I think we had the biggest volume in all this. This is 15-minute like delta chart. This is the biggest volume we had since we opened like at 9:30, like 25,855. So for me, like it's still not clear. We could come back, retest, create double top, but it could be like the buyers were squeezed. So like you said, maybe the buyers are taking profits a little bit. So it's quite interesting to see how it will play out. And yeah, as you can see here, there is like aggressive sellers here, minus 186, and we had instant continuation. Like when you see big cluster and instant continuation,
it's nice.
So so we have like this cluster here. We will see how we will react to this 3. If we go back to the candlestick chart,
And Andre, hello again. We will be looking at pound US dollar in a moment. All right.
Yeah. So yeah, we will look at pound just right after this. So now, like as you can see, like big candle at the top of this small trend, took previous week, close bearish. It's interesting to see how it plays out. I think we will try to come back if the sellers are strong, of course. There is nothing sure. We will come back to this area right here. So yeah, we will see how it will
Yeah.
look like. And Andre asked about GBP USD. Is it right?
Yes.
Okay. I think this is Michael's specialty.
Yeah, I was
Yeah.
actually just looking at it.
Yeah, it's a little bit choppy. So the daily look choppy. We are sitting in a supply zone. And
So you got that as a supply zone.
yeah,
Okay,
yeah.
this is interesting. I have it the other way around.
Like
Yeah.
how?
So
I will show you.
I'll put both of those as because it's kind of hard to say, right? Because sometimes it's supply, sometimes it's resistance. I think a word that encompasses both of them is like a key level, right? This is definitely a key level no matter what.
But what is interesting in GBP USD, it's like we created, like for me this is fresh buyers here, but in the weekly it's too big. Like you can see clearly that we took those weeks, close bullish, come retest this week, and now we are pushing higher. So we could break this.
This is weekly. Oh, okay, this is weekly.
This is weekly, yeah. Weekly.
All right, that's fine.
So this is what I call the handshake. I think I said it yesterday. Like we had this candle here, took previous week, close bearish, and now we have the inverse of it. Took the previous weeks and close bullish. So maybe here the buyers will step in. If we check, let's see the daily how it looks like. Yeah, it's for me, like I am more, if we close today, if we close up to the 1.2991, I think we're gonna see until Friday a push to the upside. So yeah.
Yeah, I'm all bullish for the pound. I've been bullish for a long time now. I think since this range started, I've been saying up. It's gonna happen. So hopefully this is actually it. I'll show you real quick the exact same thing. So on my chart, the way I have it, like because me and Howard, every time Howard's in the session, I still got like all the stuff drawn. But if I go to like the 4 hour, so the reason I'm very bullish on it is because of that gap in volume right there, right? We broke through it nicely. We're coming back and we're going to continue up basically. And that happens like pretty much there's two ways you could trade those gaps and volumes, right? It could either come towards it, reject, and just reverse, or it can break through and do that, right? Retest it, come back the other side. You can see like here, rejected, and then eventually it broke through, came back from the other side, and off it went, right? And because we're on the opposite side of it, yeah, I've been bullish until we get to up here, until we get all the way up to 1 point. It's a big range. It's a big area. So anywhere from like 1.31 up to 1.325. That's ultimately where I would start. I can imagine there will be quite a pushback, and the sellers will take control for a bit. For how long, who knows? But some kind of push down around that area, I would say, because that is the most extreme zone we have in recent times. Like that is the most extreme zone. So that's gonna react quite well, to the point where I think even though I don't trade the pound, I think when we get there, I might actually trade myself on the pound. I'm gonna cheat on the S&P 500.
Yeah. What?
I'm gonna be I'm gonna be unfaithful to the S&P 500 and actually trade the pound when we get to that zone.
Hey,
But
opportunity is opportunity.
yeah, but
Yeah, so
exactly.
we can, if Michael, you want to show like
I
the
was just about to
GBP?
say that. You took the words out of my mouth, right? Both of you two jumped on it, right? So for me, I'm with you, Sam. This is yeah, I'm more short than long for the simple fact that, let me go here. GU. Okay, cool. So if I go to GU on a daily chart, there's no way, right? This thing is just, wait, is this the daily? Oh, the 4 hour? Oh, that's what it is. On a 4 hour chart, sorry, not the daily. Look, just look at this. Like for me, right? This is a lot going on. Like you got this level. First of all, when we crossed this key piece here, right? We never, ever touched the 200 EMA again. Like just look at this. The 200 EMA has never been touched once again, right? And then we also have an 800-200 cross. So this is two huge indicators, in addition to the fact that price has not touched the 200 since it crossed. And this cross was on February 13th. We're about to go on 2 months in a second, right? Actually, yeah, the 13th. That's close enough. We need some type of pullback for one, right? For this level, the way the structure goes, this has to pull back. This is why this is topped out at the top, right? Like this is for me, this is level 3, and this is just hanging out up here. It hasn't done. Man, why is it doing this? I clicked
Too
it
much
twice.
jewelry.
I don't know why it's doing it. Okay, there we go. That was weird. Yeah, this is just kind of hanging out in this area, and we've been in here since March 25th, right? Not too long, but this is a long time on a 4 hour chart for this to just be hanging out. Like if anything, and I'm not saying I'm trading this, but because I need to see much more than it, like activity in this, but this is just hanging out. It's reached its top. We can even move this over a little bit. Let's move it up a little bit because it's kind of right here, really. And let's scoot this over a little bit too. Just a bit. Oh, my computer is glitching right now. It's acting funny. I don't know why it's doing this. All right, anyway. Yeah, we're just kind of hanging out here, guys. This is not good. Like, not for any more longs. And this what tells me this is more short than long. You can't hang out this long at the peak like this and just continue to go up. Like if you look at the cycle that I always draw, we got the W. The next thing that will happen is if this was to continue to go long, it will be some type of W structure off this 200 EMA and then go back along to take this. But we have not yet to touch the 200 EMA since this crossed. So for me, I'm not buying this at all. Like for one, it can't even break this level up here. So that's definitely not long. And two, my bias is it needs to complete this cycle, which is to come down, make some W structure, and then go long, which is option 1. That would be like the first thing that can happen. But 2 will be maybe that don't happen. Maybe it just does something like this and it just goes down, right? And we're going short. Either way, I'm short on GU. I'm not long at all. This thing can't break this level up here. And look at it now. I'll say that now, and this thing will end up breaking it like tomorrow or something, right?
Michael, which pairs currently are you in your watch list? Like,
I got a lot of them. I'll be honest.
no,
I got a lot.
for this week, I mean opportunities. Like, which opportunities you think?
Man, to be honest, my number one opportunity was EU, and that one didn't work out. EU, I looked at EG for this week. Not on the 4 hour chart, obviously. Let me go back to the 1. Yeah, I was interested in EG yesterday, right? I was looking for a move here because once we have this cross here, I'm looking for longs. right? So I was anticipating this to come up here, do some structure here, and go long, and it never did. As you see, it just broke down. For this to do it like this and come back, that's not a real move. I would need this now, seeing we're about to have this 5,200 cross right here. I would then be looking for one. Well, we already got the reload on here, so that's actually good. But yeah, I would be looking for some type of W structure going back this way to take this. Stops would be obviously below here or below the 800, whichever one. Entries above the 50, and then TP would be somewhere up here, as long as that makes sense on a short-term move. But yeah, for right now, this is really nothing for me. I'll be honest, wacky week for me, guys. I'm not really seeing too much that kind of fits my criteria as far as what I would really be interested in. EU was the closest one, and that didn't happen. I'm still, as I said, I'm gonna leave this alert here, right? Because maybe this will turn back around. And just so you know, right, what makes this dead for me at one point is this is the highest peak right here. So if 4 candles, I got a 4 candle rule. This is my high over here, right? If there's 4 candles that stays above this high, this is dead to me automatically. Like this, I would delete this alert, and that would be it. I want to see price come back below this high, which is basically honestly about right here. So it's right there. That's why I'm saying it's still in play. But if 4 candles close above this price, I'm done. I'm not interested in shorting this anymore. But if it comes back down within here, it doesn't matter how long it takes from there. I want to see price come all the way back down here somehow, close down here, and then I will redo my entire thing. The only difference would be I would need to make sure this lines up right at that point, because I couldn't seeing that this candle came all the way up here, I would theoretically want to put my stop above this point, right? So if I put my stop above here, and let's say my entry is somewhere over here, right? This still would need to make sense, right? So let's say I did that, and then I shorted this here. As long as it still makes sense, it's still in play for me. Dang, how is this? Okay. Right. So, and this might not even make sense. Yep. So look, this is way too small. Yeah, this isn't gonna end up working out good for me. So this might be dead already. So again, this might be a more cash week than anything for me. I'm gonna leave this here because I'd rather leave it there, and it alerts me, and I'm not interested in. I was interested in. I didn't have an alert, so.
Never know. It might have a bit of a pullback, and you can get a better RNI. You never know.
Yep. That's exactly right. So it could close here, do some type of. I just want to let me know when it gets here. That's all. If it never gets here, that's fine. But yeah, definitely I'll keep this on. But not too much for me, guys. Even when I'm looking at this might not happen for the simple fact that if you look at the market baseline, you see this is starting to curve up. Like it wants to continue to go back this way. And if the market baseline crosses back above the static line, I'm not taking this setup. There's just the market baseline needs to be below this 50 line for me to take it. So this is candle by candle. This is looking worse and worse for me to take this again, to be honest. But yeah, not much for me, to be honest, this week. This is a very funny, iffy. I'm playing defense this week, is what it's looking like.
Yeah. Just a quick update about the NASDAQ, because I see it's dropping.
Stop. Okay, yeah. Take it away.
Yeah. So as always we say, you have to build the context. So the context for here, let me switch to the 15 minute.
Oh, like I'm so sorry. I did have one more. So after this, I got one more. Then I guess that'll be it for today.
No problem.
I did just now mark this up.
Yeah. Okay. So we are tapping first in a 1 hour supply zone, and we had like big volume in the top So we have two things already. Of course, you will not jump directly, but I have the idea now that I am shorting. So I saw here like the sellers enter. So when you switch, actually, we had the entry on the 3 minutes this time. So the entry, sometimes I took it in 3 minutes, sometimes in 5 minutes. So yeah, so I have the entry right here. Like you see that we have big cluster, the biggest one for this candle at the top. And what happened? We had took the previous wick. You see this candle here, the 3 minute, took the previous wick, respected this minus 100 here, and we closed bearish. And we had the biggest cluster, it was in the middle, so my stop loss will be here above.
Right.
And I will have the continuation, maybe just somewhere here, a risk reward of 1 or 2. So this one was a good trade to take. If we see the candlestick charts, how it looked like now. So we tapped, as I said, we tapped in this 1 hour supply. We had big candle previous week taken, close bearish. We had continuation. Again, it's still risky because we still have 42 minutes to go. So we could create here, yeah, we could create here a wick like similar to this, but the inverse, like come back, close bullish, and continue and break this zone. But how it look like now, it's looking like it's taking over. The sellers are taking over, but most of the time, like, just one last thing, like normally before we go totally down, normally we visit the highs before, and we have a failure before going lower.
That's my exact pattern right there.
Yeah, so
Yep.
so like we have here, exactly like we have here. It was small a little bit, but still it's so some yeah, it's
This is almost like when traders see like double bottoms or double tops, they think that's the only thing that they need to see to take the trade, but they're missing like key levels and other confluences for sure. But yeah, that together with everything else, that story that's been built, golden. I would bet my money on those setups.
Yeah. And again,
absolutely.
it's all about just the patient to wait for this setup, because as Sam said, like the amount of patience you have to wait, sit and wait, because those setup you see, it happened every time, like absorption or it happened all the time. So it's just a question of like sit and wait and control the emotion.
And that's so strong, right? Because I swear, like when you're first beginning trading, you don't have the patience, you don't have the discipline, you don't have any of that stuff in the beginning. And it seems like it's so cliche for us to say, just sit and wait, be patient, be disciplined. It's like, dude, just show me how to make the money. You know what I'm saying? Like, I am telling you how to make the money. Sit, wait, be patient, be cool, you know? It's like trying to stop that girl at the bar, right? Where you like all over her. Like, dude, just relax. Like it's called thirsty. Like you're being too thirsty right now. Like, relax. Just relax a bit. You know,
what's
let
hilarious
it come to you a bit.
It's like, you know, when people work a normal job, a 9 to 5, right? They get paid, you know, well, most people get paid, you know, monthly, or some people like every 2 weeks or whatever, right?
Right.
No one's ever like impatient about getting paid, so to speak. Like no one's going to their boss, oh, can pay me now every day. Why are traders like that in the market? Just relax.
It's the weirdest thing. It's the weirdest thing, right?
End of the month, whatever you withdraw that goes into your account, that's what matters at the end of the day, right?
Yeah.
Like, you don't have to do it right now, right this second. It could be tomorrow. It could be the next week. Like, there's no rush.
That's like meeting someone and like, oh, you're pretty. What's your phone number? Whoa. Like, man, ask her a question or two first.
What's your name first?
Yeah, like what? That's literally the words are. That's not the right approach, bro. You want to be a little bit smoother than that. You know what I'm saying? Like, be smooth. You gotta be smoother than that. I bet you get a lot of denials. You know what I'm saying? Like, I don't know you. You just walking up on me on the street. I don't even know you. Like, man, relax. Ask her her name. Ask her where she from. How old is she? Does she got a boyfriend? What she like to do? You know, you gotta build something. It's like, oh, hey, what's your phone number? What? That's crazy. That's crazy.
And I think this thing happened mostly to, I don't know, but traders who are just doing trading, just only trading. So the mainly work or it's trading. He wants to make money from. He have no other job, no other
Yeah,
So he's focusing. For me,
Yep.
like if I want to give, let's say, an advice, it's just do work on your skill, but have like an income also somewhere else, so it will give you this let's say this
calmness.
calmness.
Yeah,
in your-
you're not desperate. This is the thing. It's desperation, right? Similar with
Mhm.
Michael, your analogy there about picking up women, right? If you're desperate, what's going to happen? You're going to do stuff like that, right? You're coming too
You
strong.
can smell that
messing
on
around.
you. You smell desperate, right? Like,
Yeah.
it's a sticks to that. It smell. We can smell that. It
Exactly.
smells like burnt popcorn.
That's it. And don't be desperate in the market. As well.
Yeah. It's this. I had one of the meetings right like here, and there's a lot of us who meet up here and at the beach who like moved from the United States to Mexico. So like we like have our own meetups or whatever. Like, oh, okay, you took the lead, you got here, how you liking it, whatever. It's like some pretty big meetups, like 30, 40, 50 people sometimes. And we get to the point where they're like, oh, what do you guys do? And when I say what I do as a professional, like, oh, I wanna make some money too. Like I'm like this. It don't really work like that. You know what I'm saying? Like,
yeah.
And then some people don't have a job, right? So they're like, oh, I want to do this. You can't touch this until you have a job, right? Like,
Nah.
Don't think you're gonna come over here jobless and this is gonna work out for you. Like, that's not how it works.
I'm telling you now, there's not a person alive who can handle the emotions as a beginner, jobless and desperate for money, who could trade the markets with discipline. Doesn't exist. You just won't be able to do it.
Yes.
No way.
So that's not gonna work out great. Not at all.
Yeah.
Not at all. So I try to paint that picture for them. Like, this is a skill that's built over time, right? And again, I'm always so happy to tell people, like, this is for me 11 years in the making, for me to just now being able to taste the fruits of my labor in the past 3-4 years, right? So you coming in as a newbie, if you think you're gonna just jump to the head of the line, that's not how it works. That's not you can't cheat these steps, right? You don't get to skip steps in something like this.
Nah, definitely not.
Yeah.
Definitely
And
not.
you are competing against like really smart people that they want to take your money.
Exactly.
So if you add more pressure to that, to make money and pressure of life, so you are already losing 2-0 before you start the match. So
yeah, you said it perfect. You're competing against very, very smart people, and I'm sure we all think that we're smart, but at the same time, we're nowhere near geniuses or nothing like that, right? We found some edge in the market, it's working out great. We can pay our bills from it, and we're building from there. But genius level trading, like, I don't think none of us are making tens of millions of dollars from this just yet. So we're building to that. But it's one of those things where you don't get to just come here and, like, if you're trying to take this test, you don't get to just show up for the test and just pass it. Like, no, where's your study time? Like, have you gone through anything? Like, it's almost disrespectful to us to think that they could do that. Like, dude, you're disrespecting my entire industry right now. I think he could just skip some steps and just get to the front of the line, right? Like, who are you, Machiavelli? Like, what's going on? But I know we're gonna jump off. I do want to show this cat yen chart.
Yeah,
really
go
quick.
for it.
Yeah, cat yen. So I marked this up. I didn't mark it up. I set the level on it. So I am watching for this when it does set up. Where is it? Cat yen is at the end for me. Okay, here it is. All right. So that's the 4-hour chart. Let me kick it to the 1. So yeah, you guys already know, as usual. Once you see this 5,200 cross here, right? That right there, this is where you are looking for M's off the 200. And in this case, it's M's because it's 5,200 cross to the downside, right? So 5,200 cross to the downside, right? and I'm looking for M's off the 200 EMA, right? So with that being said, I'm sure you can almost kind of see where I'm going with this.
Yep.
We got that cross, right? We got this first leg here. We got this here. Come up. It's testing this level. Now this might be a little short because of this this ADR. We don't really know. We have to measure it when it actually happens. Oops. But oh, here we go. We actually extended something out. Okay, I'll leave that alone. Just add to it. We can extend this on out. So that looks decent, right? And then we're also now the only thing is we got to be careful with this because you can see this looks like this is trying to cross back up to the upside, right? So just want to be a little cautious of this. But the cool thing about this would be that is it not only making the M off the 200, it's also making this M off this 800 EMA. So it's making the M off 2 EMAs, which I actually really, really like when that happens. Let me take this off. Looks funky up there. But yeah, if we were to execute this, it would look something like this, right? So this is why I got this target line on here. And this is not a bad one for like 1.5, one for 1.6. So this is like the only other thing that I am kind of looking at because obviously with my cycle, you guys already know, you can kind of see this funny looking M structure here, right?
Yeah.
Runs down. We got that 1350 cross. And again, so that's, this is level 1 here. I'm not going to type it up, but I'll just put L1, right? And then once we got this cross over here, we know we're in level 2. Level 2 looking for M's and W's off the 200. In this case, it's an M, right? But this is the only other thing that's kind of close. So that's on the chart. And then on the TDI, you see we got the same thing, guys. We got this outside the band. Remember, I always say outside the band, inside the band, right? And then we got the market baseline coming above the static already for this reload coming back down. This might be nice later on this week. So this is the only other thing that it looks like I'm actively watching until something happens. But we only got one day on this because I'm not trading on Friday as NFP. I said I don't touch the day at all. So if this don't set up by tomorrow, I'm done. I'm done for the week.
Yeah. This week, I think it's not a great week. Very I don't know. The market wants to play games.
Yeah.
This week, I think there's so much indecision right now. I mean, with Trump and the tariffs and all that, and I think it's going to take a while. Yeah.
You got to know when to hold them and when to fold them, right?
I'm right. That's it. 100%.
NQ is dropping, so I think we will not get this double top.
Yeah, I mean, all the buyers have left the market. It's just going to flood down, and then eventually, what you're seeing is like just a release some pressure. So I'm still bearish overall for the long term. I think on the S&P. I think today was a not a trap, but was trying to divert people, trying to get people thinking. I don't know. Today it just didn't feel natural to me.
Yeah.
When that candle moved so fast, I'm telling you, it was like 8:54. I'm like, oh, okay, well, we still got to hold it. I'm like, man, this ain't going nowhere. Man, in 6 minutes time, this thing went from holding it to, oh my God, we got to close this trade.
Yeah.
That momentum came in flush at the end. And that's part of the market cycle too, though, right? Because once again, they knew that they had to close above that price level in 6 minutes, and they did it. Like,
yeah. That's it. I mean, look, these institutions place massive orders. There's not enough liquidity in the market to fulfill their orders. The market has to jump to the next available area, and it would just wipe. It's like a vacuum. It just sucks up all the orders until it's met, and then boom, the move happens. So, yeah. But that is time, guys. Michael, Aymane.
Good session. Thank you, guys.
You're on for the rest of the week, guys. So I'll see y'all tomorrow.
Yeah.
Awesome. And to all the viewers, thank you guys for tuning in. Tune in again tomorrow. We do this Monday to Friday every day. So yeah, we'll see you then. But apart from that, take care, everyone. Have a good
All
one.
right, guys. See you
Michael,
tomorrow.
Yeah.